tune so alive. Sugar skulls keep the drive. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Step by step, we won't stop. Feel the beat, make it pop. Taking tunes so alive. Sugar skulls, keep the drive. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Come on. Come on. Come on, shout it out now. It's a Sugar Skull Show. We got lots of music, technology, and more. Come on! Come on! Sugar Skull Show, here we go. Music, tech, and much to flow. Come on, dance, let it show. Energy high, feel the glow. Lights flash, beat gotta catch. Groove to the sound, make it last. Tech magic all around. Feel the vibe, feel the sound. Join the ride, music loud. Tech and tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Gadgets, gadgets, lights so bright. Rhythm takes us through the night. Feel the pulse of the scene. Sugar skulls, living a dream. Come on! Step by step, we won't stop. Feel the beat, make it pop. Taking tunes so alive. Sugar skulls, keep the drive. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Step by step, we won't stop. Feel the beat, make it pop. Taking tunes so alive. Sugar skulls, keep the drive. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Step by step, we won't stop. Feel the beat, make it pop. Taking tunes so alive. Sugar skulls, keep the drive. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Join the ride, music loud. Taking tunes, we so proud. Sugar skulls in the crowd. Come on, shout it out now. Come on. Come on. Come on, shout it out now. It's a Sugar Skull Show. We got lots of music.
even more specialized trading support. With the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Curious about how companies are performing heading into quarterly earnings, or how the macro environment is influencing the markets, or even specific sector performance and how they're faring? Connect with me on social at Marley Caden.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
So what is unique about Schwab Coaching is the community.
There's a lot of energy, like-minded people are learning with you.
You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face-to-face with you and 400 or 500 of your closest friends.
Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience, and they help me fill in those gaps as an educator.
People learn differently, but all those ways we actually teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platforms.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Good morning, everyone, and welcome to Morning Movers. I'm Diane Kinghall, live from the floor of the New York Stock Exchange. It is Thursday, April 16th. Let's get started with what's on our radar this morning. We begin today with Wall Street sitting at new all-time highs as investors climb the wall of worry. The S&P 500 closing above 7,000 for the first time ever yesterday. Information technology pacing the gains, followed by consumer discretionary and communication services. The tech-heavy NASDAQ also logging a record, finishing above 24,000. Investors are increasingly betting that the war with Iran will be over sooner rather than later. To that end, a fragile pause in the U.S.-Iran war may last a little longer. According to Bloomberg, Washington and Tehran are considering a 2-week extension of the current ceasefire as back-channel talks continue. For now, officials say no final deal has been reached, but neither side reportedly wants a return to fighting after weeks of damage and a sharp spike in energy prices. Pakistan remains front and center as a key go-between, hosting talks and pushing both sides to keep the truce in place. One of the biggest sticking points remains the Strait of Hormuz, that global oil choke point that has been effectively shut since the war began. On the earnings front, Taiwan Semi cashing in on the AI chip boom, posting a sharp jump in first quarter profit, topping Wall Street expectations. When converted to dollars, the chip maker earning $18.16 billion, while revenue climbed 41% year over year. TSMC also raising its 2026 sales outlook, now expecting revenue growth of more than 30% this year. Just as important for investors, the company plans to spend at the high end of its CapEx range as it scrambles to meet demand for advanced chips. All right, let's do a check of where futures are as we start today's session. We are looking at a tick higher in S&P minis, better by a little bit more than 0.1%. NASDAQ 100 futures higher by almost 0.25% there. Dow futures better by just shy of 0.2%. Small cap futures just above the flat line this morning. Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, you finished things off yesterday. You're kicking things off today. I saw you bring in the close, marking those all-time highs. Let's just talk about the moment first. When you saw that it seemed like we were on course, were you surprised, I should say?
Obviously, this is actually a very unique bounce off of the lows, but after we actually broke above the anchored volume-weighted average price for the E-mini S&P 500 futures, and then we kind of looked at the technical a couple of days ago, Diane, where we actually gapped above the last resistance line. It wasn't really surprising that we saw that 7,000 level. Now, what's actually very interesting about this time, and it's not really too different, you're seeing that dispersion trade really taking place once again. And what does that really mean for our viewers here? That just means that you have institutions really focusing on a small segment of the market, let's say the Mag 7 or technology stocks in general, and then really kind of fading the rest of the market. And that outperformance that you're looking at from, let's say, Mag 7 or the technology sector, you'd like that outperformance to be better than the overall S&P 500, which is exactly what's been happening pretty much since the lows. That's a very powerful type of trade that actually came into effect and really was popular around COVID-19. That's exactly what we are seeing right now. Now, volume levels are relatively low if you're kind of looking at the overall market, even if you're looking at the indexes themselves, but there's certain pockets of stocks that are seeing positive inflows or positive dollars being brought in and aggressive volume actually being the result. Tesla being one of them, Microsoft is another one. That is moving higher. Now, if we're kind of looking at today and the makeup that we are seeing to start off, we're kind of flat on the session so far, but you continue to see this outperformance of software stocks in this market and even a little bit of a fade when it comes to semiconductors. We'll talk about Taiwan Semi here in a second, but memory names in general, seeing a little bit of a sell-off as software kind of catches a bid. That actually kind of was a reverse trade about 2 weeks ago, 3 weeks ago, where everybody was buying memory names and buying semiconductors and shorting software stocks. So this is more than a dead cat bounce, obviously. I would not be surprised if we do see a little bit of a pullback at these current levels. 7,000 is a landmark area. And if you're kind of looking at the E-mini S&P 500 futures contracts, the 4-hour chart, we are seeing the oscillators, the RSI, as well as CCI, or you can even look at MACD. They're starting to show a little bit of exhaustion and potentially a cross. That doesn't mean that we go back to the lows that we saw last week or the week before last, but it does mean that we may see a little bit more of a pullback, probably retesting maybe that 20-day moving average or the 50-day moving average before trying to move higher here. So not really a surprise. If we do see a change in direction and trajectory of the geopolitical conflict, I think that probably puts into question volatility risk. But when you're looking at it across the board, and if we're looking at the market composition right now, credit spreads are moving to the downside. That's positive for equities. Liquidity levels are improving and they're actually increasing. That's positive for equities moving higher. And you have the right sectors actually outperforming: consumer discretionary, technology, communication services, and somewhat financials. Those are really the ingredients for you to continue to maintain all-time highs.
All right, so those are the ingredients, and obviously there continues to be one eye on headlines with regard to the latest between the U.S. and Iran. But let's get into those earnings. Earnings, obviously, a big part of the momentum that we're seeing here on Wall Street. We got Taiwan Semi's results out today. Why don't you walk us through some of your takeaways here?
Well, we did see actually a really good earnings result, and for Taiwan Semi, it's not really surprising when you're seeing the revenue number come in because we do get a monthly update of their revenue sales. So that's usually something that's easier to pinpoint, similar to what we see for Costco on a month-over-month basis here. But revenue came in at $35 billion, or the equivalent in U.S. dollars. It did beat the street's expectations. They did also raise the revenue forecast for 2026. And they raised that above to around 30% on a year-over-year basis when you're looking at overall growth. Now, their guidance for Q2 was actually increased by around $9.5 billion to the upside. So they're ranging between $39 billion to $40.2 billion. Obviously, that was a beat to the upside here. Gross margins, pretty wide range when you're looking at that particular segment here. Now, the CEO did mention that memory prices is having an impact on certain segments of their business, in particular PCs and smartphones. That also is the reason why we may be seeing companies like Qualcomm kind of pull to the downside here, some of the others that have exposure to that space. But AI demand continues to ramp up, and they continue to increase their CapEx spend moving forward. It was at the higher end of their range when it comes to their guidance, and they are expecting the next 3 years of CapEx is going to be significantly higher than the last 3 years. So they're going to be building out more fabrication units, trying to get smaller and smaller when it comes to the nanometer, the nano size of these semiconductors, and potentially phasing out some of the larger production facilities when you're looking at what they are actually producing. Some of those larger semiconductors, they might be phasing those out over time. So this is a good report, gives us a good healthy check here, but the stock has been doing a phenomenal job moving to the upside here. So this is kind of a buy the rumor, sell the news type of an event, which is why we're seeing a small drawdown in the semiconductor names across the board today.
I was wondering that because of, the momentum it's had, certainly on a year-over-year basis, up almost 150% year-over-year, and then so far this year up more than 20%, so handily outperforming. So as you mentioned, I wonder if that was a buy the rumor, sell the news, and if a little bit of, kind of what we saw, given the monthly cadence that we get, it's baked into shares. Your thought?
Yeah, I would agree with that. I think there's also, a very small concern, and I don't want to really kind of exaggerate this as well, but just kind of giving you some insights as to what the market's feeling. Now, the comments around memory prices and how it's having a dampening and an impact on dampening demand for smartphones, as well as some of the other, handheld products that are out there, PCs as well. Once again, that type of language you don't really want to hear. Obviously, this is just one quarter, but if that trend does continue, then that could also then soften some of the sales for other companies that actually have exposure to those business units like Intel or even a Dell for that matter. But right now, it's nothing of a cause for concern, just something that, once again, probably brings a little bit of caution when it comes to memory chips for those particular products. If you're looking at the data center side, obviously they're seeing robust demand there that continues to drive margins as well. That's looking really healthy, but it's the other side that's creating a little bit of tension. And smartphones and PCs actually is a better segment when you're looking at marginability for Taiwan Semi than looking at some of these GPUs. Well, some of those deals have been locked in for the last 2 years, 3 years. So something to keep your eye out on, but I wouldn't be too concerned about it right now.
All right, let's talk about the levels that you're looking out for on the S&P 500 today. You gave some indications in that you said you wouldn't be surprised to see a pullback today, but talk us through what you're expecting potentially to the upside and downside.
Yeah, to the upside, 70-60 is where we are seeing the majority of the calls being transacted right now. To the downside, 69.80. I would say, Diane, these levels over the last couple of days, they've acted as accelerants to the upside. So as we break them, we have buyers continuing to step in. And we are seeing almost record volume when it comes to index options trading. The SPX, they have top tick traded contracts for the day are exceeding 200,000 contracts. It's something that we have not seen before. So it went from being heavily put side skew when we were at the lows. Now we completely shifted to the right side of the curve here. Now it's heavily call side skew. You're seeing that in the volume this morning, even if you do a simple scan of what's getting a lot of attention and traction in the options flow.
All right, thank you, KG. There's Kevin Green, our senior markets correspondent, with what you can expect today in terms of flows. Again, sitting at all-time highs for the S&P 500 and NASDAQ. Want to bring in Jenny Horn, co-host of NextGen and markets correspondent, with a deep dive into, first up, some quarterly results from PepsiCo. Those shares fizzing up a bit this morning. Looks like it was a beat here. Walk us through your takeaways.
Fizzing up, I liked that, Diane. So, I mean, I will say that we also were at pretty depressed levels going into this report. So a low caffeinated move we've seen, at least just over the last several years, but at least starting to see some real footing of hopefully some improvement, because I know a lot of times in times of overall market volatility to the downside, these staples are seen as those really safe haven names that they have not necessarily to say they haven't performed as such, but they haven't really been the same safe haven blanket that we really have known from the staples. And so maybe you could make the argument we're not really in the same type of market with things hitting all-time highs. But PepsiCo has been one that has been a story of challenged growth, as they have a lot of factors to consider: a push for a healthier consumer, as well as consumers trading down, and of course the various GLP-1 effect that many of these CEOs have blamed for some of their weaker results. But still, for this quarter, we saw first quarter net income of $1.70 a share, adjusted earnings of around $1.61 a share, beating estimates. Revenue also came in just shy of $19.5 billion. That was ahead of forecasts, and it represented roughly 8.5% year-over-year growth. So as far as the bullish factors here, North America finally returned to volume growth. We did see Frito-Lay and Quaker post about 2% volume growth, the first increase in more than 2 years after they implemented price cuts of up to 15% on some of their major snacking brands like Lay's, Fritos, Doritos, and Cheetos, all of the best Eatos there, but also helping it regain some of that lost shelf space at various retailers. Now, pricing actions proved to be effective without breaking the model. They still saw higher profits, and net income rose again from a year ago, showing right now the improved execution and cost control from Pepsi. Now, as far as outlook, they did actually maintain their full-year outlook, projecting now organic revenue between 2 and 4% and core earnings growth between 4 and 6%, signaling confidence about some of this margin stability now going forward. Now, to keep things balanced, I do think that there's still some degree of bearish takeaways here, like beverage volumes still dropped overall 2.5% globally, including weakness in their North American carbonated soft drinks, which highlighted the ongoing pressure in that business. Now, organic revenue growth of 2.6% did also lag the headline figure, showing that most of the revenue upside came from pricing, mix, and currency rather than just pure volume. And so management did flag some uncertainties tied to geopolitical, obviously, forces at hand, but consumer sentiment and consumer sensitivity has actually remained so strong. But the need for price cuts to restart volume does also show really how stretched this consumer has become, that right now you're continuing to see that trade down effect, even with, of course, markets at all-time highs.
Okay, even with markets at all-time highs. All right, Pepsi was certainly one to watch. It has been an outperformer so far this year. Okta, the shares are moving higher right now in the pre-market. Walk us through the trigger here.
Yeah, so we're seeing a Raymond James upgrade today, and encouraging to see, actually, I will say that overwhelmingly so, the sell side is still pretty positive on this name, but has felt like there's been a bit more of a tone of caution amongst these cybersecurity names with analysts as of late. But Raymond James is at least a fan today, upgrading shares to outperform from market perform, with an $85 price target, would imply roughly $15 of upside, highlighting that shares have dropped from $200 in fiscal 2023 to $60 today, as the company's net retention revenue decelerated from over 120% to 106% due to some of these downside renewals from COVID cohorts that over-provisioned and just over-corrected, the analyst said. They went on to say that they see headwinds for Okta subsiding as the company's average contract duration is just now under 3 years, and also did go on to say that these various metrics suggest a forward waterfall that should result in upside to growth. They also do believe AI has the potential for significant total addressable market growth as their core market continues to increase due to these agents in workforce. So I think a good point in highlighting the ways in which agentic AI is going to obviously continue to drive demand for cybersecurity offerings. The concern for a lot of these names is oftentimes expensive. They've gotten very overvalued, but I will say Okta still trades at a PE just below 18 times. I mean, it's not even comparable to the eye-watering valuations you've seen in a name like CrowdStrike, for example.
All right, good stuff. Thank you, Jenny. That is Jenny Horn, co-host of Next Gen. Appreciate that. Coming up, time for our chart of the day. We'll take a look at Tesla after a huge rally yesterday, extending gains this week, and news that Elon Musk is pushing ahead with ambitions to build his own chip-making operations. Morning Movers will be right back.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Schwab Coaching is concepts brought to life in the real world.
It's absolutely world-class.
We have coaches who have been in the industry and around the industry for a long time.
We have different formats because people learn differently at different times.
We have webcasts running through YouTube all day, every trading day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Welcome back. Elon Musk may be making a play to build his own chip-making operation. According to Bloomberg, a Tesla SpaceX-linked venture has been contacting suppliers about machines used to make advanced semiconductors. That's a sign Musk could be looking to control more of the chips powering EVs, robots, AI systems, and satellites. It would mark a bold move into an industry dominated by Taiwan Semiconductor and Samsung. Meantime, Tesla shares on a tear, up about 12% this week. Time now for our chart of the day. Joining us for a breakdown is Brett Crowder, Senior Manager of Trading and Derivatives Coaching, Charles Schwab. Brett, what a run Tesla has had this week. Yesterday, big move, extending some gains. You've got to look at a 5-day chart. Walk us through what you noticed there.
Yes, as you mentioned, it has been a run, Diane. And so this is interesting. If we look at the 5-day, 5-minute chart, what we see is, I want to point out on the right, the volume profile. It's had a lot of interest around the 345 area, the 365, and up around that 390, 395 area. So let's talk about the stock action that coincides with that. And so last week, it's been a pretty good week for Tesla as it's kind of drifting higher, working its way up on kind of a steady basis and going into about Tuesday now. And Tuesday, it broke above a resistance level, but it really couldn't make many new highs. It kind of resulted into symmetrical triangles that consolidated. And I've talked about this as the stocks don't like to consolidate. They don't like to be pent up. And early Wednesday morning, it broke out of that ascending triangle and it popped. This is like SpaceX stuff. It took off hard. It ran about, $30 in about an hour, and all the way up to that 390, 395 area. Now, this is what's interesting. After a strong move like that, it's not uncommon to see some sort of retracement, some sort of profit taking, and see it come back a third, halfway, or 2/3. And that's why I drew that line. That line in the middle of that move is about a halfway move of that big pop. But what do we see? It didn't pull back hardly at all. It maintained those elevated levels at 390, 395. We see with the volume profile, there's been a lot of activity, a lot of excitement around that area. And so it's holding up there even while the RSI has been declining. And so stock holding up there, RSI declining, it just indicates that it's interested in maintaining some of these levels, at least on an intraday basis, Diane.
Okay, interested in maintaining some of these levels. So let's zoom out because obviously a longer term picture can tell us more. You've got to look at a 1-year chart. Walk us through what we should notice there.
Yeah, so on the 1-year chart, I drew a couple lines in there. Now there's a level at 289. This is a long-term support level. It comes off a 3-year weekly chart. And then another level at 385, which is some support that's had throughout this year, or at least last 6 months. And then the 469, which was a resistance from the recent highs that it had. Now, kind of talking about the yearly move that it's had, Tesla had a good year last year. Running into the end of the year, it was strong, solid, moving up. But Christmas came around, and mid-December, it didn't get the Santa Claus rally or any love from Santa, and Tesla began to slide. And it's been in a slide since about mid-December. Now, this is what's interesting. You can see the resistance level I drew on there in that kind of that gold level line. And it has been holding that level, that resistance level, for quite a while. And just up till yesterday, it ran back up to it. And I think a lot of technical traders probably expected it to once again bounce down off that resistance level. But this is what happened. It broke through that trend line. It broke through the 385 horizontal resistance level. It's right at the 50-day moving average, but that's not a real strong resistance level. So really, technically speaking, it broke 2 strong resistance levels. Now, if we look at the RSI down below, this is looking at the bullish momentum. Well, you can see how it was also up against a resistance level, that 50%, which at times can act as support and resistance, and in fact, this time it did, but it broke through that. And so we have 2 things going on for Tesla here. It broke technically through 2 resistance levels. The momentum also broke through resistance, and so the stock is above some resistance with bullish momentum breaking above resistance, also coming in with some strength. And so it's possible this could run back up to the 469. It has some energy here. Now, it doesn't have to. It could pull back to like the 340 where it was support just a little bit ago. But what we're looking at is a stock who's cleared some resistance levels, possibly hit a supercharger, and setting stage for a possible run, Diane.
Possibly hit a supercharger. I like that one. Getting a little bit of a charge this morning with shares up almost 1% in the pre-market. Thank you, Brett. That's Brett Crowder, our senior manager of derivatives. Coming up, markets near all-time highs, sitting at all-time highs, I should say, despite geopolitical uncertainty. So how can investors adjust their exposure based on any volatility? Morning Movers, we'll be right back.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Intern, this place is incredible.
It's where I get all your office supplies.
Your golf balls,
Your fancy coffee, your giant TV.
it's everything in one place. It's like
Schwab. Everything investors need, all in one place.
Come again?
Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between.
I think I'm gonna be sick.
We have to buy that now.
Schwab.
Invest your way with Schwab.
We're back with a developing story. The AI shoe doesn't fit for Allbirds this morning. Shares plunging in the pre-market after yesterday's huge rally. That came after the company announced it was pivoting from making sustainable footwear to acquiring GPUs and offering compute services. It says it's going all in on AI. Shares surged almost 600% yesterday, coming back down to earth today. Welcome back to Morning Movers. I'm Diane King Hall, live from the floor of the New York Stock Exchange. As we sit now at record levels for the S&P 500 and NASDAQ, I want to bring in Ben Fulton, CEO of Webb's Investments, for his insight. Ben, let's talk about where we sit now. It seems like Wall Street just climbed the wall of worry. Any worries about the war with Iran and the ceasefire breaking up seem to be on the back burner. What's your thought on where we stand now?
Yeah, it's an interesting time when you see major, and it could be watershed type news stories out there. And yet, like you said, the markets tend to be shrugging it off now and actually digesting it very quickly and becoming more calm. We study volatility. We like looking at 1 month volatility, so we're still in a heightened state with, for the last month. But, you're going to keep getting more and more confidence in this market the longer people think that, some sort of, at least, the worst is behind us type of mentality. And you definitely see it in the VIX and, beginning to see it in some of the other things that priced up during the beginning of the war.
Okay, great points that you made there. And as we sit now, we're still sitting around 18 for the VIX right now. So it feels like volatility has certainly pulled back. Does that make sense, or are you worried about anything under the hood?
I probably look at volatility much like I would any other technical features. So does it make sense? I don't know if it's my job to make sense of it. It's one to look at it and understand, and you have to acknowledge it. If you shrug it off and say, no, the emotion of the market, or as people like call the fear of the market, this is irrational, it should be higher. This is the ultimate crowd wisdom. So I think we have to embrace it. We have to go, okay, some reasons there. I do think the one hidden secret that's out there is, and I'll call it Trump's 3D chess. I mean, when you're seeing that, yes, oil we know is critical to the world, but now everyone's showing up in the U.S. The one thing I'm looking is, and I wouldn't have said this a month or 6 weeks ago, but I think you want to be long U.S. and less international, just because I think you're getting a stronger dollar. You're getting some things that have really changed direction in the last month. So I think that's the one trade or idea that people have to recognize is the U.S. market may do a lot better than probably we ever thought, because the rest of the globe is in crisis, because they need the oil. They need the Strait to get figured out. They need Iran to put down weapons, and they probably need us to put down weapons too. But we're in the catbird seat right now.
So listen, we know that abroad they're certainly facing energy crunches, whether we're talking about Asia or Europe, especially because of the exposure for Brent crude. And when you think about oil, it's obviously been kind of the key flashpoint here. We've certainly pulled back, but we're still at elevated levels. We're still around $92 a barrel for WTI. Brent's around $95 a barrel. How should investors think about energy and even energy exposure if crude remains, kind of at these levels?
Yeah, I've been bugged for the last few years. If you look historically and you look back over charts, especially in like the S&P 500, probably for the longest time, we were almost 10% of the S&P 500 would have been energy exposure. It drifted down to like 3 and 4% of it because tech took off. But energy was kind of put in the back seat, and do we need it? And we're all going to be driving electric cars, and we don't need oil. And I think we got the reawakening that all of a sudden oil's here, oil's important. I actually think it's going to take a lot longer for this to unwind. So I'm hoping to see oil continue to maintain or increase, but I also think you're going to get we're seeing it. You're going to get a rally in technology, and we study sectors hard too, and technology, communication services, things like that are doing well, and I think that we can all guess the numbers are going to come out of oil companies at $90 a barrel oil. They're making a lot of money right now, and that's going to allow them to explore and do more. And the more the globe probably tries to become less Middle East reliant on oil, it's good for the U.S. markets. We become the oil market.
Okay, Ben, I'll yield the floor to you. Quick final thought, any way you want to take us, maybe potentially sectors that you like.
No, I think sector-wise, I think we're definitely going to see some mean reversion. I think the sector rotation right now is happening at a velocity I've never seen. For the last 30 years, I've been, one of the pioneers in ETFs, but even before that, I built other products that allowed for sector rotators. And I'm looking at the velocity of, you put on a position and you think, oh, maybe it can hit this target, and it does it in weeks, sometimes days, before it used to be, a 9-month trade or something. So, I think sectors are here, they're rotating. Some will be in recessions and depressions while others are in ripping. And I think we hadn't seen that for the last 10 years or so, because we had a pretty docile, the dollar was locked with every other currency. Everything was kind of boring. Everything went up together. That's not the case now. So I think, if you're not familiar with, you want to become very highly educated on sectors, because sectors are the decision you really make. Even when you start looking at single stocks, they got to be in the right sector.
All right, thank you, Ben. Appreciate that. That's Ben Fulton, CEO, Webb's Investments. Appreciate that. Time now for the economy check. For that, let's go right over to Kevin Hinks. He's live over at the SIBO in Chicago. As you know, we've got you covered from exchange to exchange. All right, Kevin, we've got a fresh look at the job market this morning with the weekly jobless claims. Why don't you walk us through the numbers?
Good morning, Diane. 207,000 jobless claims, initial jobless claims, first-time filers for unemployment insurance. That is lower than last week. That came out 219,000. As you know, it was lower than the consensus was about 212 or 13, depending on how you read. So again, remember, last week was a jump from, I think, 202,000 to 219, now back below 210,000 at 207. The Philly Fed manufacturing, that's another one of those regional manufacturing numbers that we get, Diane. 26.7, a nice jump from 18.1. They were looking for something actually lower this month. Comes out big jump to 26.7. So good solid numbers out of the regional. What I do with the regionals is you take Empire State, you take Philly Fed, and you start to form a picture of what's going on nationally based on the regional numbers. So not a big market-moving number, but certainly a regional number that we start to pay attention to. Big jump in Philly Fed, jobless claims much better than expected, 207,000, Diane.
So it just looks like the economic picture is holding up better than expected overall with each of these economic data points that we get in recently this week, especially, one of the things that stands out to me is the job market just overall holding up better than expected, especially in the face of concerns as a result of the ripple effects of the war with Iran and energy prices and how that would feed into the economy. Your thought as you look broad strokes across the markets, we're sitting at all-time highs. What do you make of that?
Diane, big picture, right? With everything that's happened in the last month, since really, if you think about it, the end of February, unemployment is 4.3%. The 10-year yield is 4.28%. Jobless claims numbers are low. The overall U.S. economy is doing extremely well. We're off to a great start in terms of corporate earnings so far with the first batch. Banks and a couple airlines, Netflix today after the bell. But think about this, Diane. Coming up on the horizon, April 29th, Meta, Microsoft, Amazon, and Google Alphabet will all report earnings. On the 29th, April 30th, Apple. And so when you look at that, Tesla on the 22nd, and then, of course, NVIDIA further out into May 20th. That usually comes about a month later. But there's big names on the horizon that have all been beaten up. Now, Microsoft is off to the races now, recovering some of its numbers, but certainly there's big economic earnings coming up on the calendar, and the market can't ignore it. Obviously, there's things that are disrupting, like crude oil prices and like the what's going on between the United States and Iran. But the U.S. economy, resilient and powering forward, Diane.
All right, thank you, Kevin. And we will continue to power forward this morning. That's Kevin Hincks, co-host of Fast Market. Time now to power forward with Alex Coffey, co-host of Next Gen Investing, with a look at CoreWeave this morning. Looks like there's some more bullish sentiment around it. Walk us through the latest here, and good morning to you, Alex.
Yeah, good morning, Diane. CoreWeave up, I would say negligibly this morning, a little bit better than the market, maybe 1%. Wolf Research, one of the analysts that provided some positive sentiment, as you mentioned, initiated coverage of CoreWeave with an outperform rating and a $150 price target. They view CoreWeave as best positioned in NeoCloud to continue expanding capacity with positive fiscal year 2026 catalyst path, and they believe that its financing engine is a key differentiator that sets it apart from its peers. They also note that CoreWeave leads in all 4 elements required for success in this NeoCloud market. These are relationships with suppliers, capacity, demand sources, and project funding. Cantor Fitzgerald also raised their price target on CoreWeave to 156 from 149. They were already in that overweight rating camp. And the analyst over there highlighted that CoreWeave's $6 billion deal with Jane Street, alongside its recent large agreements with Meta and Anthropic, demonstrates strong demand and supports significant backlog growth, potentially reaching $100 billion by the second quarter of 2026. So really impressive stuff out of this company.
Yeah, certainly the case. I mean, those shares up more than 60% so far this year, and it looks like the sell side is going all in on this one. Glad you mentioned the Cantor note, because I noticed that this morning with them raising their price target as well. Final thoughts you want to leave us with, Alex?
Yeah, this NeoCloud sort of AI data center and compute as a service continues to be a really fascinating part of the market. It's been under the radar, I think, in the last 6 months, but it's absolutely not anymore. You can't ignore it. We're talking about, Bloom Energy this week. That's sort of within that world of finding access to power and compute. CoreWeave is certainly one of the faces of this part of the industry.
All right, one of the faces of that part of the industry, you heard it there. That's Alex Coffey, co-host of Next Gen. You can catch Alex later this afternoon. Coming up, we'll take a look at 2 Mag 7 stocks that one guest says they're inexpensive versus their peers. Morning Movers. We'll be right back.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management,
and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com. Welcome back to Morning Movers. I'm Diane King Hall, coming to you live from the floor of the New York Stock Exchange. The bulls have the reins on Wall Street. For insight, we want to welcome in Molly Pironi, president of Yacktman Asset Management, for perspective on this rally that we're seeing. Molly, I want to start with a big picture thought from you. The S&P 500 sitting at record highs, NASDAQ too. What's your take on the bullish sentiment that's come back to the forefront? Does this make sense to you, or are we getting too comfortable?
Great question, Diane. At Yacktman, we're fundamental value investors who think like business owners. So we're looking for risk-adjusted returns. And at today's valuations, you've just seen such a market, like multiple expansion throughout the market over the last 3+ years, that it's really hard to get comfortable with some of these prices.
So talk to me a little bit more. So you mentioned you have a value-oriented approach. I know there are a couple names within the Mag 7 that you like. One of those is Microsoft. Tell us a little bit more about your views on Microsoft, because it's been on the mat. It's been making a comeback recently, but do you see some value there?
Yes, we've owned Microsoft, get this, since 2003. Oh, wow. So we're long-term holders, and we're sort of not kidding about that. We've held it at varying sizes over those years. But with Microsoft, you've got a dominant player across many of these important segments, and a leadership team that just continues to innovate. When we owned it back in 2003, everybody had left it for dead. Steve Ballmer was running the company. It was a very different company back then. And actually, the price didn't go anywhere for a decade. But meanwhile, the company continued to build brick by brick incredible value. They actually launched their cloud business during that time period. And so we're able to hold a company and look for the business results to be improving, while not trying to chase price in terms of, these crazy multiples that are out there right now.
Okay, and then you also like Alphabet, Google. Now, on a year-to-date basis, it's obviously hasn't had the same kind of year it had last year, but it still had some gains this year. Do you see value here still?
Absolutely. I mean, Alphabet is another one of those sort of think of these as long-term compounders in a strange way. We're looking at a company that has the deep scientific roots at Alphabet are unmatched. I mean, the DeepMind team has been innovating in this space since we even knew about this technology as outside investors. And we see in Google an opportunity to own a company that's really on the cutting edge. Now they're getting into the chip business. I mean, you look at what they're coming up with from a scientific perspective, and then building businesses around those. So you really get to own one of the leaders there in Alphabet. And then you get things like Waymo and YouTube essentially for free, a kind of hidden value that we see in a company like Alphabet.
Well, they make sense getting into or digging deeper into the chips business versus an Allbirds who says they're going to be an AI company now. I'm sure you saw that headline, which is wow. All right. Sorry, I don't want to go too far on that tangent there. Let's talk about another name that, you've got your eye on. This one's interesting to me. You like U-Haul. On a year-over-year basis, it's an underperformer, but I guess with your value approach, you see an opportunity here. I'm curious to know the thesis behind this one, especially when you think about, because I attach this, I think about the housing market and the challenges of the housing market, which has been pretty frozen. But why do you like this one?
Yeah, we've been long-term holders also of U-Haul. It's actually a family-controlled business by the Schoen family, and we like it because they run it like business owners would. And we see there's basically two companies within a company. You've got the trucking side that you're referring to, which is basically the Kleenex brand of self-moving, right? You've got customers, think about it, you've got customers driving around in trucks, basically driving billboards. And basically 1 in 20 of those trucks are represented by the capital that we manage. So we're clearly very interested in that. But then you have a whole other side of the business that's a self-storage business. And because they don't report their financials in a way that allows you to easily comp the self-storage business with its public storage REIT equivalents, you miss the value in terms of how much U-Haul is really worth. So you've got like a public storage actually bought a competitor about 2 or 3 weeks ago. If you use the same multiple onto U-Haul, you've actually got a company where you're getting the trucking business for free based on that self-storage multiple. So it's a very interesting business with the leaders investing in it like business owners and building the company for the long run. Eventually, companies like this unlock. They lag for quite some time sometimes, but we're looking at the NAV of the underlying business to see where they're allocating capital, and are they treating that capital like business owners would.
Okay, I want to zoom back out, Molly. So the view on Wall Street is that the war with Iran, the off-ramp is coming sooner rather than later. But there is one wild card left, right? That's rates. What happens to rates from here? Because we still have elevated energy prices, right? And the expectation is we're going to see a Fed on hold for longer. If rates kind of stay where they are for almost the balance of the year, the consensus view is we're just going to get one rate cut this year. What sectors or businesses do you think hold up in that kind of environment?
Yes, it's very uncertain environment, and at Yacktman we watch it carefully, but we leave it to others to try to predict these outcomes. But when we're investing, we're thinking about these types of risk all the time. We've got a pretty significant piece of the portfolio invested in the energy space and in defense, but we have had that for the last, I think we put it in at late 22, early 23. So we've been in the space for quite some time. We also expect, that these, the prices will hit the consumer. The rates will hit the debt eventually. And you've got companies that have, in some cases, very highly levered balance sheets across the market. And people really aren't talking about the risk associated with leverage and debt that can kind of show up when you least expect it.
All right, thank you, Molly. We'll leave our conversation there for time. That's Molly Perrone, president of Yacktman Asset Management. Thanks to you, Molly, this morning. Coming up, time for Options Corner. We'll look ahead to Netflix's earnings. Those come after the close. Morning Movers will be right back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab as everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
We're back on Morning Movers. Netflix in focus after the close as the streaming giant gets set to report its first quarter results. The Street is expecting earnings of 76 cents per share on an adjusted basis on revenue of $12.17 billion. That would mark 15% growth year over year. Netflix has rallied since it lost out in the bidding war for Warner Brothers Discovery. Shares are up 43% since February 23rd. Time now for Options Corner. Joining us to take a deeper look at the chart is Rick Ducat, lead market technician here on the Schwab Network. All right, Rick, walk us through the trends you notice on this chart.
Diane, despite my love for K-pop demon hunters, I promise to remain neutral here, but we can see that Netflix has had a big rebound off of those lows that we saw recently, kind of matching up with when the deal fell through. You can see that this was right about here where the deal collapsed here. Netflix enjoyed that windfall breakup payment here, still only up about 12% on the year. When we look at this streaming space as well, we can see that, some very wide dispersion. Obviously, Warner Brothers Discovery is the standout name here, but also Roku, Disney doing pretty decently here. So when we look at Netflix more specifically, here's that jump that we saw off of those lows near 75.01. A gap level here stands out. The level 90.50 to about 100 matching up, 87 to 90.50 matching up with that gap, and then 100 marking another gap and subsequent high here. If we were to keep rallying to the upside, another high here, 110, and then another gap level here further up matches up with about 116 to 123. So some pretty notable levels based on gaps stand out for this particular chart. We can also see that our moving average picture is improving. Price has rapidly crossed above the 4 moving averages that we follow. Now our closest one, our 5-day EMA, comes in near 104.62. RSI also a bit unusual, still trending upward here, still in the overbought area, almost at the 80 reading. You commonly see RSI slow heading into earnings event, but here it's remaining quite strong. So an interesting setup for traders to watch out for.
All right, certainly seems to be the case. Thank you, Rick. That's Rick Ducat, Duke of Data himself. Now take us through an example trade. We've got Tom White, senior options contributor and co-host of Fast Market. All right, Tom, what's the approach you would take for an example trade, especially heading into its earnings for Netflix?
Yeah, we've seen a nice rebound from those lows, and Netflix is still down about 19% from those all-time highs, so keep that in mind. The option market pricing in plus or minus about $7 move in either direction here going into the report. So as we've rallied a little bit, some of that implied volatility and with the event risk has come in a little bit, and we've got the VIX down near 18, so not surprising on the rebound that we've seen. So I looked at a strategy that takes advantage of volatility dispersion between option series. And you can take a directional bias on this. You can do it to the downside if you're bearish, or to the upside, like my example is going to be here, where I'm looking at a really short-term, 1-week wide bullish call diagonal here in Netflix. So I'm going to go out to the April 24th weekly cycle. So you got 8 days to expiration on this. We're going to buy the at-the-money 107 strike call, and then against that, in the near-term options, which have the higher implied volatility, we're going to sell the April 17th monthly, the 114 strike call. So this call diagonal, $7 wide, aligns with what the 1 standard deviation move is on a 1-day look at Netflix post-earnings. So keep that in mind. So $7 wide bullish call diagonal. You're going to pay, if the stock opens up here around 107, you're going to pay roughly about a $3 debit. So you're paying less than half the width of this bullish call diagonal. Why is that? Well, because you're buying about a 65% implied volatility on aggregate in that April 24th 107 call, and then selling over 100% implied volatility on aggregate in that April 17th 114 call that you're selling on this. So if you pay that $3 debit, that's going to be your risk. $300 per spread takes your break even. Anything above about 108, 109 is going to be potential profitability on this trade. That's about a 1% move to the upside. So well within that 1 standard deviation range that we've got, a plus or minus $7. But you can see the apex of profitability at or near that strike that we sell in the near-term options in the 114. So this might be the way that you look at it, just based on the volatility levels in the different option series on this. Now, I mentioned this is a bullish call diagonal. If you're more bearish, if you think this stock's going to maybe fall that 1 standard deviation, you could buy a put diagonal using the same option series for that, but it just sets up to the downside on that. But this is all about if you think the stock's going to rally post-earnings, really short-term positioning on this one.
All right, thank you, Tom. That is an example trade there for Netflix, which has its earnings due after the close today. Futures are inching higher this morning as the bulls look to advance the milestone levels that we've seen yesterday. The S&P 500 and NASDAQ both closing at records. We'll see if the S&P 500 holds on to that 7,000 plus level. S&P minis right now better by more than 0.1%. So too are NASDAQ 100 futures. Dow futures better by 0.25%. Small cap futures have been fluctuating this morning. Thank you so much for joining us today on Morning Movers. I'm Diane King Hall. Download the Schwab Network app. It is available in the App Store. And tune in 24/7 on schwabnetwork.com. Stay with us. You've got Opening Bell with Nicole Petalides up next.
So what is unique about Schwab Coaching is the community.
There's a lot of energy, like-minded people are learning with you.
You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face-to-face with you and 400 or 500 of your closest friends.
Some clients like to be in the privacy of their own home on an online workshop, but still having that
educator. People learn differently, but all teach it. All come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platforms.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away
all right, so it looks like the predictions for NVIDIA did not come through. Price is still holding at 197.
Welcome to Schwab Network, where
But
real-time market coverage meets expert strategy.
From the opening bell to the close.
All right, let's close this out. All right, so the predictions, well, it didn't go this low. Create alert. All right, so it did not go that low, but it did not go higher than 200. So they're saying that 200 set a sale. I'm still above. $200. See, I'm going the opposite way. I'm saying buy down here. If it's low, buy. If it's high, sell. So, anyways. Let me see, what's that? Anyways, okay. So we've got our limit. We're using paper. We're not using real cash. I wish. If I had to real cash this, I would be like, nope. I'm not spending any money. But that's the whole thing, right? You got money, use money to make money. Right. So we're going to buy. If it's a sell, if we're going to buy, we've got a $10,000 limit. Let me do another buy thing here. Let's see if we can. Buy custom. Buy. How do I... Simulation, not a real trade. Is there a... buy... OC... bracket... with stop limit, with stop... Guess maybe I don't. Maybe I don't have that set up right. Get rid of that. I guess you're so. I would think the strategy is going to be if it breaks here, buy. And if it goes down here, sell. So the wheel is still not working. Gamble is. You got to bet. I will gamble. Oops. You got back half your bet. So let's see. 9,565 points. out. All right, so Solari is up. Bitcoin. Nvidia is down. Unity is up. Citibank is up. SoundHound is up. So far, my market's going pretty good. Court is in session. The verdict is in. 97. Starting at 5:40 a.m. It was 99 cents. Nvidia was at $199.70. It is currently down to $197, so down $2. My $2. There's the 199 mark. It actually got up to 200. What was that? About 1 o'clock in the morning. Okay. Missed that one. Candlestick went down. I wonder what the deal is. Why is there so much? Let's hit the Schwab channel. See what they got to say.
Yeah, I mean, it really is unbelievable. I mean, there's bullish than ever. I love those kinds of quotes. They really Look, I mean, whether you believe it or not is your choice, but I mean, we've seen such great numbers in the last few quarters from Taiwan Semi. They've been unstoppable, and you know, seeing this revenue to grow by over 30% is pretty unbelievable. Let's talk about, and by the way, they played down that supply chain, which you mentioned. I like that they said, you know, they're not as worried about the Iran war or the supply chain issues. That made me feel a little better. How about Pepsi? I mean, they cut the price of Doritos. That's paying off, right?
It sure is, and you know, price cuts are, and it's nice to say price cuts, not price raises. I'm so really in like a fact of saying that for so long that it's nice to say price cuts. So they slashed their prices on so many of these signature snacks, like things like Doritos, and there are major signs in this earnings report this has helped their business. So did say revenue climbed 8.5%, which I know is dwarfed by some of the pace of growth we just outlined with Taiwan Semi, but this is actually a pretty nice story for PepsiCo that of course does not see the same growth story, more of that stable, staple type player. On an organic basis, revenue was still up 2.6%. They did announce back in February cutting their prices on some of their chips and snacks by as much as 15% in a bid to somewhat bring back these cost-conscious consumers to these traditional snacks like Lay's potato chips, Fritos, Doritos, the Edo company, as Kevin Hanks does call it. But they did say that affordability was the big reason consumers held back on some of these purchases. And in some markets, the price of these large bags of chips was well over $6. I know that you can definitely feel as personally as I'm in Chicago, I'm like, oh, we're paying even far beyond that here. But they did also overhaul
Can I
their
get some
marketing
chips for $6?
on the fact that they're made from more of these real ingredients, trying to change the packaging and again hone in on these consumer trends that are more
$6 chips, baby.
Organic, less ingredients and less chemical-based products. Americans have been not only looking for value but trying to be more mindful of their
All right, I need to jump to a meeting.
The rise of these GLP-1s,
So I'll leave you here with
the
Schwab,
years. But
the Schwab
overall,
ladies.
This has definitely put an
Hello,
emphasis
ladies.
on Pepsi to really pivot some of their overall strategy. They did also launch like Gatorade Low Sugar with 75% less sugar than their traditional thirst quencher model to then, of course, compete in a more healthy, organic type of market. So all in all, really nice report for Pepsi. Management did still flag some rising uncertainties tied to geopolitical conflicts and input costs. Their CFO did note that while their hedging is in place for packaging and raw materials, which is right now covering roughly 9 to 12 months, cost volatility does remain a risk beyond that window, as I'm sure a lot of companies are feeling right now, but at least poised for a slightly higher open today, and a name that actually is up about 8% on the year, even going into this earnings report, Nicole.
Yeah, and you know, I mean, the Gatorade story I think is a great one, and I was just peeking also at Papa John's and Yum Brands where they have Pizza Hut, because there have been reports and market chatter that Yum Brands and Papa John's are advancing the sale processes of their pizza chains. So we'll see what happens there. Papa John's is just up 0.2%, same as with Yum. So nothing doing there yet. But as I thought of this, I thought of that. So thank you so much. It's great to see you, Jenny Horn. Appreciate it. Coming up, we'll get you ready for the trading day. Glenn Dorsey from Clark Capital is standing by. We have some up arrows. Can we see new records again right at the opening bell? We'll see.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings
To volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Hi, I'm Alex.
I'm Jane.
And I'm his mom.
Sometimes you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Welcome back to Opening Bell, getting you ready for the trading day. We saw records yesterday. Will we see them again? Glenn Dorsey, head of client portfolio management at Clark Capital, is with me. Look, we've seen the market being so resilient. I know you saw those records yesterday. Can we get some more? We have some up arrows here. Do you think we'll be seeing more this week, next week?
Well, good morning, Nicole. Thank you for having me on. We definitely have a little bit of momentum, but we have had a massive rally in a short period of time. You think about, it took 21 days for the market to go down about 8% from when the Iran conflict started, and then in 11 trading days, we've gone up about 11%. So that's a pretty sharp move. It wouldn't be surprising to see a little backing and filling at some point, but the fundamentals are incredibly strong.
What are your takeaways from the earnings thus far? I know it's only the beginning, and we heard mostly from banks, but we'll get Netflix later today, and we've had a few others. Your thoughts?
Yeah, this week we'll have about 7% of the S&P report by now, and we have about an 88% beat rate at about a 6% beat level. So the fundamentals look good. This will be the 6th consecutive quarter of double-digit earnings growth.
Yeah,
and that's incredible. And if you look at the forecast for the rest of this year, you have 3 more after the first quarter.
I mean, when you say it out loud, the 6th consecutive quarter of double digits for growth. It's amazing, right? I mean, can that keep up?
Well, I mean, we've gone through a lot of bad news. You go back to last April, we had the tariffs where everyone said we're going to have a recession and earnings were going to fall apart. Didn't have that happen. This year we replaced it with a war, and the earnings continue to come through. The revenue, the top line growth looks solid. The profit margins are there. Obviously, the increase in energy prices is a concern, because it will filter through transportation and some of the input costs, but we do still think there's a lot of momentum for earnings.
And so with what's going on with the Iran war, I mean, are you sort of in the camp sort of following what the market says, that it's going to be done type of thing?
Well, that's anybody's guess, right?
Right,
so
right.
It looks like we have the ceasefire ends on Tuesday. It looks like they're talking about extending it another 2 weeks. It's in everyone's best interest to get it resolved. The rest of the world, particularly Asia, needs the oil that comes through the Strait of Hormuz. Iran needs it because they need the money, right? So it's in everybody's best interest to get it resolved. Hopefully that happens sooner rather than later.
You talked about the economy. We just got in the jobless claims of 207,000, a little less than what was expected. We've been around that level. You said no hire, no fire environment. You okay with that? I mean, what do you think the Fed should or should not be doing now in the next few meetings?
Yes, so we've had a higher rate of about 3.2%, but if you look at the layoff and discharge rate, that's been steady at 1 to 1.1%. So as long as we're at kind of a low 4% type unemployment level, we're okay. You have to remember the labor force is definitely growing slower at this point as well. So in our mind, the Fed can sort of do whatever they want. I think a mistake by the Fed would be to raise rates because of energy prices.
What do you think about Mag 7 names? And we were just talking about how we will be hearing from most of those in the future, not this week. But do you like any of those names in particular?
Yeah, I mean, I think as a group, you had multiples go from 30 down to 25. And if you look at the earnings growth that they have, the multiple that you're paying for that earnings growth is very attractive. So we think that the pullback that we had in the market is a buying opportunity. And they're all in good spaces, right? In terms of things that are secular growth areas. So I think that the group, by and large, looks attractive. Look at Russell 1000 growth is the only major index that's not in positive territory year to date.
Yeah, I mean, the Russell's about to hit a record too. It's less than 1% off the record. I mean, the S&P, NASDAQ, Dow Jones Transportation Average, Russell's close. The Dow's not there. Let's talk about some of the other opportunities that you see in buying. I mean, and you mentioned that Mag 7 doing well in the growth growth, and Taiwan Semi came out and had some great numbers. So let's talk about other areas that you think have growth potential. What about financials? We heard from a lot of the financials. Which ones do you like and why? What kind?
I think the money center banks look good. The multiple in the financials has come in, and that's probably the second highest, fastest growth rate for earnings this quarter. So the earnings are there. There's some regulatory issues that will be in their favor, maybe less capital, less regulation. So we think there's a good tailwind for the financials.
Yeah.
So that, along with tech, is kind of a good pairing in a portfolio.
And healthcare, you like healthcare?
Healthcare still looks good. The multiples have come down. The earnings aren't quite there yet, right? So they're getting cheap. You got to wait for that catalyst for things to turn. You can be selective. Industrials earnings growth is there as well, but the multiple's a little bit higher. And that's why you want to have a diversified portfolio, right? Sticking with high quality and be diversified. Right, understood. When you look forward to the end of the year, do you feel like we'll be higher than where we are now? We do. We do. Normally, in a midterm election year, you get a rough patch, usually starting about now for the next few months, and then the market will start a rally towards the end of the year. The war kind of accelerated it this year. But I think as long as if we have double-digit earnings growth, it's hard to imagine that the market will not be higher because the multiple relative to the growth rate is really not expensive. Is anything worrying you, whether it's private credit or the price of oil or inflation worries? What would you say is the headwind? Yeah, private credit is obviously selectively can be problematic, and we're having more of a rush for liquidity there, a run on the banks in that space. Does it worry you, or do you think it passes? I think by and large it's become very isolated. I don't think it's a systemic problem. So from our vantage point, it's not going to affect the big money center banks, right? By and large. And I think there's a point in time where there's so much selling that's going on that it just becomes a liquidity event more than a quality event. Understood. I mean, and the final thoughts here, just when you take a look at, like, for example, the 10-year bond yield, I mean, where do you think bond yields will be headed? Because the housing market has been pretty tight. Mortgage apps came down again. You have this K-shaped economy, which you referred to in your notes, and you're seeing, right, the people on the upper part of the K are buying the premium seats on the airlines, and other people, are concerned they don't have affordability to buy a home. Your final thoughts? Yeah, so our expectation is we were going to be range bound on the 10-year, 3.5 being the low end. Really? Yeah, and 4.5 being the upper end. Obviously, we've been pushing closer to that upper end right now. But I think once the dust settles down in the Middle East, I think that you'll start to see rates drift down again because we have a slow growth, mature economy. Well, it's great to see you, Glenn. Glenn Dorsey, Head of Client Portfolio Management at Clark Capital. Thank you, Glenn, for being here. Coming up, a quick break. We'll count you down to the start of trading. Lots of action here on a record-setting day on Wall Street yesterday. Will we get another here this morning? Opening bell. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library, filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
Welcome back to Opening Bell. We're watching for records this morning. We also got an industrial production, a manufacturing production, and capacity utilization numbers in the last few minutes or so. Those coming in a little softer than expected. Sam Bottas is with me, joining me, talking a lot about the big picture and all the things she's watching really closely. Good morning to you, Sam.
Good morning. Yes, the industrial production coming in a tad soft there, as you said, Nicole. But all in all, looks like a pretty good tape today as far as jobless claims are concerned, showing resilience in this jobs market, the labour market. Obviously, we've got those TSMC numbers, which look good as well. I mean, they're going for a fourth quarter now of record profits with that 30% full-year revenue forecast as well. So they continue to sort of knock it out of the park. We're not seeing so much of that in the reaction today, but we also got some nice GDP numbers out of China overnight, growing 5%. That was better than what the market was expecting, and certainly it seems like that export growth engine continues to rev up. So all in all, things look good. Of course, we are coming into Thursday's session with these record highs, the S&P and the Nasdaq, but I would mention that Japan actually became the latest Asian market to recoup all its losses from the war and actually hit a record high overnight as well. So we are starting to see this globally now, Nicole, and it's been really interesting. People have just been so surprised at the fashion in which we've got here. There's been a lot of stats being thrown out there. I've seen people talking about how since 1928, this is the first time the S&P has made a new all-time high in 11 days or fewer after falling 5 to 10%. It's been really interesting, actually, also, while we did hit a record high yesterday, only 12 stocks in the index actually made a 52-week high. Since 99, we've only seen 5 readings that week or worse. So really interesting dynamics in this market. Obviously, we've got NVIDIA on 11-day winning streak as well. So this has been something to watch. We've obviously seen that leadership back in action, which has taken us to those all-time highs as well, Nicole. And Ed Yardeni has come out with this new acronym this morning, not FOMO, Nicole, FOMOOP. This is his new acronym that says basically investors' fear of missing out on peace in the Middle East. And he has said happy days are here again. In fact, his title of his note today is popping the champagne corks. The glass is more than half full now. So obviously a lot of optimism going into today, as I think investors are just really hanging on to obviously this next round of talks and what that could potentially bring as far as an end to this war.
Somebody's,
I like how you said that. Okay,
somebody's happy.
The new language that we have to keep up with.
Yeah.
That's good.
Too many acronyms.
Also, Google in talks to allow the Pentagon to use Gemini models. That's in classified settings. That's according to the information. But that's something to watch here as the opening bell breaks too.
See, I would have done a sell right there.
The last half hour as well. You're also watching the Live Nation verdict.
Yeah, so this broke yesterday in market on close, just around the closing bell here. And what we saw was a 6-week trial that wrapped up with the federal jury actually finding and ruling Live Nation, which is of course Ticketmaster is under, as illegally monopolizing the industry, Nicole. So this includes overcharging people for tickets to events. So they found concert goers to have overpaid by $1.72 per ticket. Doesn't sound like a lot, but as we know over the years, people have long complained about fees for concert tickets. And this has even been criticized apparently by artists like, I was reading Taylor Swift, for instance. It comes after years of regulatory scrutiny here. It's been seen as a big win for a number of states, more than 30, which really pursued this case. But as far as the immediate impact here, we'll have to wait and see if this does prompt any changes subsequently to come from this, whether they have to pay this money back, Nicole, how much it would actually cost Live Nation. There has been a suggestion I was also reading about as well in some of these reports that it could lead potentially to a possible breakup of the company. We have to wait and see, particularly if they are talking about having illegally monopolized the industry, maybe a bit too big for their boots. But the next step is obviously working out the penalties and punishment for this. Now, obviously just a fractional gain ahead of the cash open right now, but we did see that come off considerably following the breaking news just yesterday afternoon.
All right. You know where you go, Sam Bottas. Thank you. Folks, you ready for the opening bell here on Wall Street? Here we go. Right now, you're seeing looking like new record highs here on Wall Street for the S&P 500 this morning, folks. The S&P right now at 7,033. It is up 10 points here, but has already hit a new record high. As far as the NASDAQ here, I'm watching that for action also. New record high for the NDX. And, we're not that far off for the Russell, but we'll keep an eye. So here are the exact numbers right now. The S&P's at 7,032, up 9 points. The NASDAQ 100 up 30 points at 26,235. The Dow Jones Industrial Average up 0.25%, 48,571. And the Russell is gaining almost 1 point. So pretty flat there as oil and gold are both higher, and the 10-year bond yield is at 4.27. As far as sectors here, I'm seeing a lot of green. The only down arrows are healthcare and utilities. Everything else well into the green, led by real estate, energy, and communication services. So there you have it. So these are the first moves of the open. We're looking like pretty much a 75% up day. I'm joined now by Diane King Hall here on set. Exciting day on Wall Street, Diane, as we are now looking at markets that have once again hit record highs for the S&P and for the NASDAQ. And it's a great day for folks who were feeling pretty crummy after the 5 weeks of selling and being in correction territory. Now it has run up quickly, folks, so stay nimble.
Yeah.
In the meantime, you're taking a look at a lot of key names to watch, including Okta getting an upgrade.
Yes, the bulls are out in force on Wall Street today, including for Okta. It's getting an upgrade from Raymond James. They are going to outperform on this one, setting an $85 price target. That signals more than 20% upside from here, which means it would claw back the downtrend it's had so far today. And you are seeing that at least some gains on the day, with that stock rallying more than 5% at my last check, maybe up as much as 6% now. That's correct. It's up more than 6% right now. The firm says a key headwind that's been an overhang for Okta is dissipating. One of that overhang was the pandemic era software licensing. A lot of companies had overbought seats and licenses during the pandemic, and so you had some downsizing of renewals there, right? As the contracts renewed, customers trimmed their spending. There was some slower growth. Raymond James says that headwind is taking a backseat now that most of those renewals have rolled through. And so they see cleaner growth comparisons from here, and they think that that will help revenue growth accelerate, especially after some slower quarters recently. And they see the view that investors will reward this name, especially given that growth they expect it to stabilize, and then you have some improvement in visibility. Another thing is that they actually think AI will help Okta. Raymond James says agentic AI could actually be a tailwind for this company. They think as AI agents increasingly perform tasks inside companies, that they'll need identities, permissions, and access controls, and that is a part of Okta's core business, meaning engaging who or what gets access to the data. So they think that they will actually be able to lean in there. So again, you can see the stock rewarded right now, and part of this again is evaluation, given that they think that.
Don't worry. 20% pricing. That's not inflation.
What is it?
That's
prices going up?
Deflation. We've been lowering price for 100 years.
You know, it's an important point you're raising, which is the underlying commodities that go towards whatever it is, and then polyethylene and plastic and so many other things.
Raymond's hedged against. He's hedged on aluminum. Pepsi.
But the point I was making, Jim, is are we underestimating the costs as a result of oil being up at 90 or $100 for quite some period of time?
It's a sacrifice of winning the war, stupid.
Okay. Beyond the sacrifice.
Oh, I'm sorry.
Yeah, that's all right.
I'm sorry.
Beyond that,
Sacrifice of winning the war, stupid. That's hilarious.
In Japan or in South Korea, where they are so more dependent on natural gas, where the price for them is far, far higher than it is the price here.
It's about $20 natural gas.
Is that a technical term? They're screwed?
Mm.
Yeah.
Yeah, actually.
Okay.
It's actually something I look
Okay, but will it result in higher prices for some of the things we buy from them?
Oh, we buy so little from them. We buy Renault per card. Sorry.
Well, we buy a lot of chips, don't we? I mean, just in chip making and
makes all of his chips here.
Plastic. All right, he's talking about Pepsi. You want to talk about Pepsi? That's fine.
Yeah,
Let's move on to Pepsi. You have thoughts on it?
Yeah, I thought it was a great quarter, but the stock is up a lot. Ramon did a great job. He understands the smaller packages are good, but I thought the Gatorade hydration product you hydrate faster with Gatorade than you do with water. Science proven, just like remember when University of Florida proved that Gatorade was better. This is also going to be a very hot product. They're taking out the
Oh
colors.
my God, we're heading into idiocracy.
He's going to be joining us on Swapping the Street in the next hour, actually.
Oh, that's fantastic.
Soon we'll be watering our crops with
Yes, Elliot.
Yes.
You know what? Oh, I've got one that it's just you'll just love this.
Please.
Elliot.
What was I can't remember what the product was on Idiocracy that we were watering our plants with because water is from the toilet.
Elliot versus Elliot.
I don't know that Elliot, the firm, wants to wade into Nike, the stock.
What, they like New Balance?
Ooh, those are very nice. Not Allbirds. You didn't get those out of the closet just for...
No, Allbirds is going up against CoreWeave.
Allbirds, I know.
What are they borrowing? By the way, I'm going to just say, I'm going to go back. It's a travesty. It's wrong. If they do this stuff, it's more of these do it. You and I are going to have to say sayonara to the market. The SEC should be looking into what they're doing.
Well, I don't know.
They
Somebody
have no right
stepped up to give them $15 million to change their entire business model. And of course, as we told you yesterday,
and say,
at Allbirds become new bird.
This is
with GPU.
It's hilarious. I mean,
look at Nike.
this thing is freaking nuts. They're freaking nuts, dude.
Back to Nike.
They're just nuts.
I mean, you've been dead wrong on Nike.
I just don't get it. I mean,
you should literally
zoom out, zoom out, zoom out, zoom out, zoom. There you go.
Oh no, I fillet myself.
Flagellate.
All right.
This is hilarious.
We always used to say back in the Marcane days, you're from the church.
So CNBC is good for
Nike's
something,
up today.
anyways.
I mean, taking everything away. Do you buy it here? Forget Allbirds. We'll move
No, you
on
have to
from
wait
that.
for the quarter. They had 2 bad quarters.
Yeah.
Some people would say it's a 2-strike game. Others say they see green shoots. What do you got?
Nothing. I want to get rid of Allbirds. I want to bring Nike up. We're talking about Nike.
SEC, call them in and say, what are you doing, guys?
All right. You were making a point at Nike. Wait for the quarter.
Nike, I'm wrong. I talked about it at the beginning. You know what?
There it is.
I would join the club just to watch what I do at 12 o'clock today. What are you doing?
Is that just a sales pitch for the club?
Hundo P.
Okay. Here's a company that's not public yet, but I wanted to talk about a bit this morning, and we mentioned it very open to the show, which is SpaceX. We had learned previously that that Alphabet owns what could be as much as $100 billion stake. Now, for a company like Alphabet that has a market value over $4 trillion, it's not. For you and me, $100 billion still matters, but for them, it may not mean that much. But it does go to, again, what is going to be a lot of excitement around the upcoming initial public offering of SpaceX. We're going to learn a lot more, I would think, in the not-too-distant future when we get an S-1 that is no longer privately filed from the company, and we can read about the underlying fundamentals of the business. Obviously, a lot of launches.
Let's see, what widget do we want to add here?
How much money is XAI losing? Don't know. Remember when they did that deal where they brought it in, they valued it as much as $250 billion for purposes of bringing SpaceX and XAI together. And then, of course, the bigger question, what are they going to value this whole thing at? That being SpaceX. Will it be,
remove,
some in the press have speculated as much as $1.75 trillion. Will it be $1.25 trillion? I don't know the answer, Jim. But I would point out yesterday, if you're looking at the fundamentals and you're thinking about Starlink and the power of that, SpaceX did announce the completion of the first ever 33-engine static fire test of its V3 Super Heavy booster. And they talk about that being a major step clear. There's video of it. Starship Flight 12 closer than ever, with the next generation vehicle expected to take its first flight as early as May. Important milestone for them, and why we come back to Starship so often is because when they're able to actually have Starship going up with the enormous payload it has, they're going to be able to release so many more satellites than currently is the case. That is going to significantly increase the robustness of the network, broadband network being offered by Starlink. Where will it be able to compete? Maybe never in urban areas because you just can't propagate the signal, but maybe suburbia, rural area, maybe parts of the world that aren't available. And then, of course, that competition with Amazon, which announced their deal to acquire Globalstar just a couple of days ago.
Well, in the fabled Andy Jassy letter, he talks about there's 1 billion people that are underserved.
Right.
This is all for that billion. By the way, you know who has the billion is Mark Zuckerberg. I mean, he's got a lot. We forget about Zuckerberg when you talk about billions of people who are served.
We do, and it's funny. I'm looking here now because there was some Moffett-Nathanson research about Meta. I'm sure you've seen it because you read everything. Will it spark a rally? That mean the new model from Meta? Obviously, there already has been a rally.
A lot of people love that.
Along with so much of the rest of the market, you can see this month it is up almost 18%.
Wow.
We still talk about the fact that I'm just even looking here. The forward PE, they've got it at 21 times. Forward, 21 times.
And he's so good. He brought in all this A talent. We're now starting to see that talent produce. Remember, everyone said he paid too much for people. That's wrong. He knows how to buy. He's a talented
man. His capex spend is incredible. And they are going to, negative free cash flow. They're fine. Obviously, they still borrow far less than your average company. They still got leverage ratio that's not anything as significant.
With who?
Say again?
You made so much fun saying I was in. Blue Owl is their partner.
No, I thought there was a time when you liked Blue Owl. I'm sorry, when it was higher. That's all. I know you didn't like it for quite a while.
Stop lying about my record.
Okay, well, stop. I'm mistaken. Don't let it bother you. I'm here to support you, except when I tear you down.
No, the Blue Owl, it was Blackstone that I liked at 101. And you can ask Jonathan Gray about that, because I was out front saying, I am a buyer of their private credit.
He loves you.
Does he really?
Yeah, of course, big fan.
That's nice.
He's a big fan.
I didn't know that.
Absolutely.
That makes me feel good. So, David, we got a couple things we got to talk about. J.P. Morgan rains on the youth parade.
This is a freaking
maybe we should get a little
nut
more
show, man.
or a little more circumspect about the data center, and they downgrade one of my favorite positions, Corning. They take down Corning. It is a takedown, by the way, and they may not think it is, but ouch. I mean, look at that. And that stock has been one of my biggest wins. Unlike this is a Nike upside down. But yeah.
All right, be right back. No, I got about 15 minutes. I need to check.
People, it's kind of like Taiwan Semi. It's up so much.
But look at that move. And that move is almost all based on the data center, correct?
Yeah,
and what they do there, replacing copper with fiber, right.
Fiber has a better latency.
Yep.
When I was down with Wendell Weeks and Tim Cook, in Harrodsburg, Kentucky, had Wendell Weeks be the CEO of Corning, he talked about how fiber could take over the whole darn data center because they burn so high.
Right.
And people have to recognize this, burn so high. That was something that the great explainer, Michael Intrater, first told me.
Right. Jim, Oracle shares are they can't be contained, up another 5+%. Stock only now down 8%.
What if Larry bought some stock?
The week for Oracle is already, it's on pace. It's got to be one of the best weeks the stock has ever had,
David,
right? Look at that, almost a 30% gain.
300.
It did, but Larry Ellison's net worth is going up dramatically again.
Have
now,
you ever been to
obviously,
his island in Hawaii?
I've never been invited. If he does invite me, I will be happy to go. Although he'd probably hunt me or something, right? I have that vision.
Is that kind of thing?
Yeah, I don't know. Yeah. Welcome to the island. You have 24 hours to try and live.
Ain't got nothing for
No,
you
you don't
there.
think so? It's pretty maudlin, huh? Kind of morose.
New Yorker said that Jeff Probst may be the greatest TV person.
Yes, thanks, Survivor, yeah. Anyhow, if I ever get invited to the island, I'll let you know.
Okay.
But remember, he's got a $44 billion equity check. Now they're bringing in a lot of partners as well. I don't think it's going to be an issue. Remember, everybody wanted to point to Oracle stock price. Is he going to be able to write that check to buy Warner Brothers? Well, this certainly doesn't hurt. This 30% move in less than 4 trading days.
But look, it has. Remember all the money spent on the credit default swaps? How's that going?
Going the other way now,
Going
right?
the other way.
Yeah.
David, Eli Lilly, a new iteration of one of their pill being used for more things is going to be able to be but it's really for diabetes to pull up the usage from next year to the second half of this year.
Right.
Look at that.
Yeah,
those people are scrambling.
They are, yeah. But that was a great trade for quite some time, and obviously as that moved up, the stock price moved down dramatically. Remember, we started talking about it back in October. Can't even go back that far.
Did you see, by the way, the CoreWeave deal?
No, tell me about the CoreWeave deal. Tell me, what is this with Jane Street? What are they doing with Jane Street?
Jane Street bought it's like $1 billion deal that CoreWeave got. Jane Street invests $1 billion in CoreWeave. And you know, Jane Street, those guys are pretty smart.
They tend to be. Yes, they tend to be.
CoreWeave was kind of at the heart of what's going on. The stock was up 10, now it's unchanged. But it's, again, this whole thing that you started right at the top of the show. The battle that is going on between the industrial revolutionists, a CoreWeave, a Jensen, and people who are basically saying rear guard action, but we're here to stay. Snowflake, which is actually here to stay no matter what. Salesforce, let's see if are they getting to Salesforce?
You know what, Jim, in the last few seconds we have before we take a break, wanted to point out we're going to hear from Netflix tonight.
Right. I think it'll be terrific.
And the stock has rebounded dramatically after they stepped away from their deal to acquire Warner Brothers. Of course, something that, as you all know, I covered very closely. But take a look at what that stock has done really since, it had traded down to
it's funny.
Sort of below 80.
I know.
And that has been a significant move. As you see.
I would not doubt Netflix.
It'll be curious to hear if they have any commentary and talk a bit more about it, because I think it is the first time we're going to hear from them since that. And what Sarandos and Hastings have to say.
You know what?
And
Jassy did not talk enough about his own production, MGM, his own productions.
Yeah.
I think it's, look, I know it's never going to be really big, but because the rest of the business is so big, but Amazon has so much good that people didn't realize. That was a wake-up call. I think that Google, I know that it's up really big, but they could do a very similar thing. They could take that stuff to 400. It's so good.
These are the modern day conglomerates.
Right.
I mean, think about where they got $100 billion stake in SpaceX. I don't know. Waymo.
Wasn't that incredible?
YouTube. What's YouTube worth?
Oh, it's the largest TV station in the world. And then
the Google Cloud business.
But it's Google Cloud that's going to lead the company.
I know. And then the search business. So you could, I don't know what some of the parts is there, but
such a great company.
It's quite something. And of course, the market cap reflects it to a certain extent at $4 trillion. It has a larger market cap than Apple. Worth pointing out. Does Alphabet.
Apple, no one talked about China's sales much better. They only like to talk about things that are bad Apple. But today's a reversal day. People think everything's going up too much, and that gap up at the beginning of the day is always a bad sign. That's people who are late to the party. We talked about that.
Yeah. All right. Let's get a quick look at the bond report before we head to break. Check out our treasuries faring this morning. Of course, haven't really talked that much about yields. They figured prominently there, a lot more in terms of the trading during the part of the war. There's the 10-year.
Amazing. PPG does not impact the 20% price increase in a company that
No.
involved in all sorts of coatings. People say,
No.
don't worry about it. Asterisk that.
And there you see rates headed a bit lower as well this morning. We'll be right back.
Which flip it back
this
to
number to
swap
come down as we get more and more of reporting in time, but off to a roaring start. We're going to get our appetizer for sort of big tech earnings with Netflix, and I'm looking forward to that. Particularly how their advertising tier is doing. It's been their fastest growing part of the business. It's expected to basically represent a 45% compound annual growth rate in the 6 years from 2024 to 2030. We'll see if it's still on pace for that, which is really, really impressive. They increased prices. We'll see how that's spilling over into margins. And of course, we want to hear what's the strategy now that you
$18 a share.
Warner Brothers, acquisition. Where are you going to go? Are you looking for other content expansion ideas? Or are you investing back into the business and your own original content? Excited to hear from Netflix as they set the tone for big tech earnings, which is going to be a really big part of this story.
Look, right now, we're seeing some of these mega cap tech names pulling back. Amazon, Tesla, Broadcom are pulling back. Meta's holding on to the green. I mean, there was definitely a rotation back into tech, especially after it was sort of left behind for a little while and people thought tech was hot again, and that's why we saw the NASDAQ at highs. You're watching the banks and some tech too, Jeff.
Yeah, absolutely. I mean, the banking story has been really interesting, and I think it's, adding to some of the confidence we're seeing out of investors, right? That, what we saw was that banks show the economy is still looking resilient right now. Trading revenue is very high. Investment.
Just a reminder, you can practice trades. What I've got going on is I've got a Schwab account. With your Schwab account, you get Thinkorswim for free, or you can subscribe to Thinkorswim. But you can do paper trading. Paper trading, you're not trading anything. I don't have 100,000 whatever dollars in my trading account, but what it'll do is it'll give you some paper money, just pieces of paper, which really is what money is, but just a non-value piece of paper that you can trade with, and as you can see here, you can get you can say, okay, like this Nvidia stock, was that a good choice for me to pick? I don't know, but what I did was I set some boundaries, and I said, okay, if it goes below this, I want to sell. If it goes above this, I want to buy. So if it went 197 at 197.24 is going to sell. If it was at 198, buy it. So that's what that is. So anyways, like I said, you can at least get your feet wet and come in here and do some trading and see what it's about. I'm new at this, so this is probably going to be part of my retirement. My Social Security checks will go to this most likely. If there is even Social Security at that point. So what I'll be doing is most of the day I'm going to be on here looking at the stock market, posting the stock market. There are contests that you can win on my channel. So if I put in exclamation points, and it will give me how many points that I have from Botrix. I can do a gamble. Let's say 600. Between 1 and 100 points. So 100. Oh, I lost the bet. I rolled a 2. I lost the bet. You can also do slots. We go 100. You earned 100 points. Nice. 2 matching emojis, and you get ×2, so you earned 100. Then if I do my points again, it should have bumped me up. It did not bump me up. What the fuck? 9615, 9615. It says I earned 100 points. What's up with that? Anyways, what we'll do is at a certain time, closer to the end of the stream, around noon, we'll say, we'll do a drawing to see who wins a Sugar Skulls t-shirt or merchandise. I think that's what I'm doing today is I'm going to do a t-shirt, so you can win a free t-shirt if you're watching, which currently says there's nobody watching, so that's why I feel comfortable making this announcement that I'm not going to have to give away a t-shirt. Let's see. Store. So there's the link for the Sugar Skulls Show store. Feel free to peruse. Check it out. There's a nice little Hawaiian shirt on there that's real nice. There's a nice hoodie on there. And then, of course, the Sugar Skulls t-shirt, which is the one that I'm going to be, which is in the contest today. Contest prize for the day. All right, I got to get to another meeting, so I will leave you back with Schwab, and I'll be back in a little while.
The thing about Schwab coaching is that clients get access to 9 different sets of expertise.
We want to engage with you in chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade, so we shall see.
We have different formats because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
We've got this ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Welcome to Morning Trade Live. I'm Sam Bardis, live from the floor of the New York Stock Exchange on Wall Street. We've got plenty to hit on both here and abroad over the next hour. So here is a look at what is coming up. We will look at the state of the US dollar amid the war in Iran and how the conflict continues to impact the market. Over the next hour, we'll have example trades for TSMC and Alphabet. TSMC is coming off the back of earnings this morning, and Netflix, of course, reporting its earnings later today after the market closes. For now, let's take a look at where markets are trading half an hour into the session, because we came into Thursday with records for the S&P 500 and the Nasdaq, but have lost some steam this morning. The S&P 500 right now just on the line to the downside, still above that 7,000 mark at 70.17 right now. The Nasdaq 100 losing about 0.2%. Obviously, we have seen the Nasdaq going for this 11-day winning streak now. So the Dow Jones shedding 9 points or so just on the line as well, and the Russell 2000 just down fractionally. So range bound, as you can see here on the major averages, as we are, of course, looking for a little bit more direction this morning, perhaps hitting the pause button on that record rally we, of course, saw yesterday. So let's flip the boards and take a look at how some of these other major markets are performing in international markets as well. We've got, of course, a nice performance out in the Asian session. We saw the Nikkei 225 actually becoming the first, or I should say the latest Asian market to recoup all of its Iran war losses overnight, up 2.4%. The Hang Seng Index up 1.7%. Europe currently still trading. We are doing this on the FTSE out in London, 0.6% higher, and the DAX up 0.7 right now. So we've seen nice risk on across our major averages internationally as well, off the back of this record for the S&P 500 yesterday. But of course, as I mentioned, we seem to be losing a little bit of altitude this morning, as there had been some expectations. Once we hit that record, we may actually just drift in the short term. Let's take a look at some futures products as well, because we also had some data out this morning. Jobless claims holding up 207,000 there, signaling a resilient labour market. Industrial production a bit soft there, but things still seem to be holding up okay as far as the economy is concerned, and the global economy for that matter as well, with some nice GDP numbers out of the UK and also China overnight. We've got the 10-year yield at 4.29, the US dollar index picking up right now. We're going to have a discussion about that next, given that it did wipe out all its Iran war gains. It's currently firming up at 98 there on the Dixie. The gold is trading like this. We're just down fractionally, 48.18 right now. Crude oil is at 93 bucks. So we're picking up a little bit in the session right now. We're going to talk about this to Kevin Green in a second as to perhaps why this is happening. We're up 2% right now. Bitcoin is losing a bit of steam this morning, but still holding at levels of around 73,000 and change. So that's how we're looking this morning, coming off records, and of course, still a lot of macro data to chew on, and of course a lot of these earnings, TSMC and Netflix, of course, later this afternoon as well. Off the back of the banks, we now get into some of the more regional players as well. So as promised, let's get out to KG now, just for a market thought here, as we seem to be just taking a little bit of a breather now, KG, off the back of what we saw yesterday. Perhaps no surprises, given some of the people that I've been talking to had been saying that they were cautiously optimistic about this rally, but also the likelihood that we were perhaps going to pause or at least drift in the short term, given the run-up that we'd seen. Just walk us through your take on the market performance this morning.
Yeah, I would agree. I mean, if you kind of look at this move to the upside over the last couple of trading sessions, we've started to see this dispersion trade coming back into effect, and you'll start hearing about that a lot more. And what that really just represents is a concentration of positioning in a small segment of the market, say it's the Mag 7 or technology stocks, and then you have pretty much a fading of some of the other sectors in this market. And that's exactly what has occurred, where you started seeing a flurry of dollars going into communication services, financials for the most part, as well as technology stocks. And then you also saw maybe a de-risking one when it came to the defense stocks. And that's really driving us higher because of the market cap weighted average of the S&P 500. Today, it's a little bit of a different reaction. You are seeing a broadening of the market, but a selling when it comes to technology stocks, like, or even if you're just looking at the Mag 7 as a whole here. And that's really what's kind of creating maybe some of this intraday churn when it comes to the market. Now, it's not bad. We're pretty much flat on the session, trying to hold this 70.15 level. Let's see how we actually resolve this. But that's really what's driving this market. If you also look at another component that is catching some positive flows this morning, it is going to be high yield dividend stocks. So if you're looking at telecoms like T-Mobile, Verizon, or even AT&T, they are also seeing some buyers stepping in here. Now, that might be a rate play, or that might be something a little bit more long-term or long-lasting here. So a pullback would not be out of the norm. Obviously, this is actually a very unique bounce off of the lows and the aggression that we have seen for the price action. But I think we also have maybe that geopolitical risk still in the background that we have to be mindful of. Everybody's been really pricing in that we're going to see a resolution over the next 2 weeks. Sam, we've been talking about the next 2 weeks over the last month and a half or so. But you are seeing crude oil move to the upside, and that's because Iran actually did speak with some Pakistani mediators and stated that the U.S. has to comply to Iran's demands, and so that's a little bit of pushback from the narrative that we've heard over the last 2 or 3 days, where it seems like there's a lot more optimism, which is once again driving energy prices higher, moving equity prices lower, seeing a little bit more of a rotation back into those defense names, as well as the high yield dividend stocks, which usually is a safe haven for uncertain times.
Okay, yeah, that makes sense. And perhaps what is driving oil this morning just slightly higher, up almost 2% at $93 a barrel, with, of course, what Iran has been saying with that pushback, talking to the Pakistanis about obviously their requirements, what they would like to see from the US side. Obviously, we've got some data to chew on also this morning. KG, we got some jobless claims, 207, looked okay. I mean, signaling a resilient jobs market for now. Industrial production slipping a bit to 0.5% of a decline there month over month, which was less than the market was expecting, but all in all, things seem to be holding up okay. Just walk us through your takeaways from some of the data we got this morning.
I would say it's actually mixed. If you look at capacity utilization rates, it's kind of a second tier type of economic indicator, but that came in at 75.7%. Street was looking for 76.3%, so lower than the Street's expectations. We also saw a revision from the last month, and the reason why I bring that up, if you kind of go back and look at the data set, this is the lowest print that we've seen for this particular economic indicator pretty much since October of 2021. So you are still seeing some pockets of weakness. Maybe you were seeing a lot of these industrial companies that may have seen a drop off in demand and or an increase when it comes to input costs, starting to pull back some of the utilization of their industrial facilities and maybe pushing prices higher. This could be a leading indicator when it comes to inflation. Keep your eye out on that. There is a direct correlation between the two. But the employment data was actually very favorable. Initial claims coming in at 207,000, better than the Street's expectations. The 4-week moving average now is sitting at 209,000. So that's something to be mindful of. We did see a slight uptick when it comes to continuing claims, but that might be seasonal. We have to be mindful that the last week and the week before last, spring break is also in effect, and that usually creates a little bit of seasonality when it comes to these numbers. I would say on the industrial front, when we're looking at this data set, when it comes to industrial production, capacity utilization rates, not that great. Employment, it's holding up. Markets once again gyrating, and I still think the headline right now is going to be the geopolitical news as well as the earnings calendar and the earnings data that we're going to get over the coming weeks that really drives this market.
Okay, yeah, I mean, it seems like a mixed picture, as you say, across some of the data we've got this morning. And just your takeaways from earnings season so far, perhaps no surprises what we heard from TSM?
Yeah, no surprises. I think if you were going to nitpick at the earnings announcement, they mentioned the fact that prices for memory chips is actually having an impact when it comes to smartphones as well as PC demand. So you did see a little bit of a pullback for some of these companies that have exposure to those particular markets, but obviously they are still driving really good growth when it comes to margins, top line revenue, CapEx spend is increasing. They're going to increase CapEx spend aggressively over the next 3 years in order to expand capacity. And this is a stock that's been able to outperform. So a very high bar going into this report. I think it really did meet the mark when it came to the whisper number. And the slight pullback, I think, is just the result of the exuberance that we have seen for the price action over the last 3 months, 4 months.
All right, next cab off the rank will be Netflix. We'll be giving you a preview throughout the course of the program. Thanks so much for getting us across some of those key stories and the movers in the markets this morning, KG. Coming up, we will look at the state of the dollar amid the continued war in Iran. Morning Trade Live is back after this.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Intern, this place is incredible.
It's where I get all your office supplies.
Your golf balls,
Your fancy coffee, your giant TV.
it's everything in one place. It's like
Schwab. Everything investors need, all in one place.
Come again?
Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm gonna be sick.
We have to buy that now.
Schwab.
Invest your way with Schwab.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
We're back on Morning Trade Live. Tesla's CEO Elon Musk is moving ahead with his Terafab vision. Bloomberg is reporting representatives for the joint venture between Tesla and SpaceX have sought price quotes and delivery times for chip-making gear. The group of companies they've reached out to include Applied Materials and Lam Research. Tesla has seen a big rally in shares, up 12% this week. Quite a big jump yesterday, up over 7% in the session alone. Let's take a look at some of the winners on the session so far. We've got Lumentum up there on semi and Coherent. So a few of our tech plays, and then Albemarle in the business of lithium and other things, up 7% right now. So that's your scorecard as far as the leaders are concerned. Let's flip the boards and take a look at the laggards as well. We've got Abbott Labs down 4%, Carvana down 3.5% or so, Comfort Systems USA down 2.5% as we stand. So it comes as we are seeing a pretty range-bound kind of day for our major indices off the back of these record highs we touched yesterday and this morning before losing some steam. Let's talk about the macro though. Joining us now is Jim Mastuzzo, who's the CIO Research Affiliates. Jim, so nice of you to join us.
Thanks for having me.
While we've seen US equities and some other international markets, for that matter, actually recoup all their losses from the war, it's been interesting. Not everyone's been talking about the dollar. I mean, the greenback has actually wiped out all its gains at 3% on that relative safe haven bid that we saw for the currency. Just walk us through how you're thinking about that now.
So in the beginning of the year, we said 2026 should be a continuation of 2025. 2025, we saw the dollar sell off about 10% against major developed markets, equally against emerging market currencies. We'd been saying for a long time the dollar was expensive, expected that to continue. Obviously the war threw that into a mix. January, February, we did see the sell-off. We saw the rally in March and into April, and now as we see potentially a wind down to this conflict, we expect that to continue, particularly against emerging markets.
Okay, and you've actually said you prefer non-US equities to US, and is part of that based on the dollar?
That's right. So from 2010 to 2022 was so hard as a U.S. investor to invest outside the U.S. because you had this structural headwind of the dollar continuously just getting stronger and stronger. Now that becomes a tailwind. Combine that with the fact that U.S. equities are trading at record multiples or close to record multiples, depending on how you want to look at it, relative to other countries that are more fair value to even cheap. Well, there's just a great differential there for investors who are probably at this point way overweight U.S. equities relative to the rest of the world.
Right. I mean, yes, certainly international markets have been outperforming the U.S., and we've seen basically this week investors kind of going back to that pre-war playbook. I mean, if you take a look at the South Korean Kospi, I mean, the TAIEX this week, and also the Japanese markets, which rallied to a record last night as well. So where are you looking ex-US?
So for most investors, the emerging market basket is the right thing to look at. If we want to break that down, we are seeing rallies again in East Asia, particularly now that the conflict might be winding down. Korea was up 50% in the first 2 months of the year, gave back about half of that. Now we're seeing that start to move.
Nearly back up to 50% again.
Yes, exactly. Now we can talk about whether that's irrational exuberance on the war ending, but you know, South America is an interesting place for us when we start looking at countries like Brazil, Chile, energy exporters, food exporters, access to fresh water. Obviously, you have fiscal challenges that always exist in South America, but we see this as an opportunity for those investors that have a longer time period.
Okay, and it's safe to say we can go back to that. I mean, that narrative that we came into 2026 with, particularly for the case for EM, even though there's an expectation that even with higher oil prices that there could potentially be a lag effect. I mean, Europe could be next. I was reading about, I think it was AP that came out this morning, that Europe has, what, like 6 weeks left of fuel, jet fuel?
So our perspective is cautious optimism is the right approach. The market seems to be optimism squared. We're hitting new highs. It's a little bit disconcerting. I feel like we're a little bit out in front of our skis a little bit because of exactly what you said. We're running down all these stockpiles, not just in oil and jet fuel and diesel, but fertilizer, helium. There's a whole set of things where the supply chains are essentially broken. And we have days to weeks, I think, to sort of resolve things before we really start to see these knock-on effects across all industries, all countries, pretty much everywhere.
Do you think there's going to be a lag effect? I mean, do you think we could see as strong as a second half of the year as we've seen for at least the majority of the first half? If there is some sort of lag in that data based on the prices we've been looking at?
I think if we end this resolution and start opening up the supply chains in the next weeks, by the end of the month, let's just say, there will definitely be a lag effect, but I don't think it'll be as serious if this goes on another month and a half. If we're talking about this in Memorial Day, we're in a whole different ballgame.
Got you. It's all about that duration. I think that's really been key in this conflict, hasn't it? Let's talk about what we're seeing as far as, AI. It seems like the leadership is back in action. That's certainly what took us back to the all-time high yesterday. I mean, NVIDIA on like 11-day winning streak. Someone pointed out that's like a record. What do you make of all of this? I mean, there's been incredible stats about how the NASDAQ, how quickly it went from those oversold levels to overbought. I think that takes us back to the quickest run since like the 70s or the 80s or something like that.
I will say I was surprised that 11 days was a record for NVIDIA because I feel like NVIDIA has been rising so much that I would have thought that it was much longer than 11 days. So we learn new things all the time. I wrote about recently the sell-off in software in particular in February, the SaaSpocalypse that they were calling it, and basically laying out the case that it seemed overdone. Yes, we were trading at very high multiples, a 70 PE in software that came down into the 30s, high 30s, still high, but not what it was. So a little bit of a pullback made sense, but the narratives around AI is going to take over everything in the immediate future are just overplayed. So what we did is sit back and say, okay, let's look at these risks to software companies, which are real, but look at them on more of a horizon approach. What do we think is going to happen over the next 12 months, the next 5 years, and then beyond that? And really where we see the real risks of commoditization in SaaS companies is really in that longer term. AI is an amazing technology. We all use it and we're all better for it at this point. But to make it to do it at an enterprise scale, there's still a long way to go to get there. And I think the market is now realizing that. Right.
Okay. So you're not the only one that says it's overblown. I mean, that certainly has been the argument, particularly from a number of sort of more high-profile tech bulls like Dan Ives, for instance, as well. Then I'm wondering from a valuation standpoint, and we talked about NVIDIA as well, where we have seen that Mag 7 multiple compression too. Was that just a valuation reset, do you think?
It's hard to tell. Most likely that's true, and that's kind of how we're thinking about it. We've been telling our clients, though, forever, the concentration you have, or most investors have in the Mag 7, is just disproportional to what it should be in. Any 7 stock should be in any portfolio.
Right.
So now is a good time to think about diversification. No one wanted to talk about diversification. 2025 opened that up a little bit when we looked at emerging markets up 30% relative to 20 in the U.S. So, the message is starting to resonate again. The diversification regret that everyone had in the 2010s has, mitigated just a little bit.
Right. Some would call it FOMO, and it's interesting because Dr. Ed Yardeni came out with a new acronym today, FOMOOP, which is investors' fear of missing out on the peace in the Middle East. So I'll leave you with that. that one, Jim, but certainly interesting. Thanks so much for dropping by. Safe
Thank
travels
you.
back to the West Coast there. Jim Mastuzo, who's the CIO Research Affiliate. Coming up, we'll get a closer look at the big picture with the team from Charles Schwab Morning Trade Live. We'll be right back.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day, so.
Sometimes you know.
Next. Try it again.
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
We're back on Morning Trade Live. Allbirds is experiencing a pullback today after making massive, that's to say the least, gains yesterday after the company announced it was pivoting from making sustainable footwear to acquiring GPUs and offering compute services. Shares surged almost 600% yesterday, but are down in trading today to the tune of almost 30% right now, down at $11.95. So quite a remarkable turnaround there. But let's focus on other things now. Welcome back to Morning Trade Live. It's time for the big picture. Let's welcome in the team from Charles Schwab. We've got Joe Mazzola, Head Trading Derivatives Strategist over at Charles Schwab, and Liz Ann Saunders, Chief Investment Strategist, Schwab Center for Financial Research. Very good morning to you both. Liz Ann, let's start with you because I just love all these stats that everybody has been crunching, given just how surprised everybody has been with, I think, the pace and the fashion in which we got to that record high yesterday. The first time in history on the S&P 500 that we got to an all-time high only 11 days after a pullback of 5 to 10%. What does that tell you, Liz Ann?
Well, I do think it tells you that there is a lot of really short-term money in the market. That's the mechanics of the market that mean if there's a narrative change or even a mild narrative change, you can see things turn on a dime. The inflection points tend to be more powerful, and then you get quick players to play the momentum of that inflection point trade. And so we're just seeing more condensed moves in the market. Somewhat reactionary moves, or in this case, just an anticipation of a resolution here. The only rub is that very, very, very small handful of stocks within an index like the S&P 500 are trading at new 52-week highs. So we haven't really gotten the kind of breadth thrust you'd like to see alongside the rapid move at the index level.
Interesting. And Joe, let's unpack that a little bit further, because obviously we came into 2026 with the narrative very much being around the rotation. We were starting to see that breadth. And then, of course, we saw the Iran war. We saw a retreat. And it feels like this week we've almost gone back to that pre-war playbook in some ways. I mean, when you take a look at, maybe international markets, for instance, which are catching a bid once again. Just walk us through how you're thinking about that story right now.
Yeah, let me start by adding a little bit to what Liz Ann's saying, because I think it's an important point to add on to, is that a good percentage of the move that we saw from this, if you want to call it a V-bottom, which has taken stocks to all-time highs. I think a lot of it had to do with some of the CTAs. So those are basically hedge funds. Those are basically commodity-driven type of funds that are using momentum as an indicator. So a lot of them got caught on the short side. It caused a bit of a squeeze, which pushed the markets up. I think $19 billion last week of systematic buying came into the CTAs, and expectations from Goldman Sachs were for about another 40 billion going or moving forward. So I think that was a big part of it. That's led to different sectors, as you're mentioning, Sam, seeing some of those inflows. I think where we've seen some of the most relative strength recently, not overall, but just recently in the last couple of weeks, would be some of those sectors that before the war just were kind of left to dead, and that's discretionaries, that's financials, that's IT. So those are coming back a bit, but we'll see if that momentum carries forward.
Oh, absolutely. I mean, it's fascinating, isn't it? Because you and I were discussing last week that, perhaps we were seeing a bit of a short squeeze. I mean, most rallies do start off like that. But as you point out, the hedge funds flipping to net buyers for the first time in 8 weeks. That's notable. Liz Ann, just getting back to you, obviously, a lot of people have been talking about it. And in fact, you were quoted, I believe it was by Cooper Howard the other day, who said it's not about good or bad. It's about better or worse. Is that what we're seeing in this market right now? Because even without the Strait of Hormuz being open, even without this next round of talks and some sort of resolution with the sort of light at the end of the tunnel, we still managed to hit an all-time high.
Yeah, Sam, I think that is the case in this environment. But frankly, I think it's quite often the case that better or worse matters more than good or bad. That's been a tagline of mine for decades, and it really references the market as a leading indicator, and it tends to try to sniff out those inflection points, whether it's economic data or earnings data or geopolitical related news, when things stop getting worse but start getting better. And by definition, at that point, you're at the bottom of the V. So in a snapshot way, the data still looks fairly ugly, but the market has an uncanny ability to sort of sniff out that inflection point. And of course, it does it in the opposite direction too. So yeah, it is that look ahead nature of the market that causes some of these moves to look like they're unsupported by fundamentals. They're supported by what the market is suggesting about the future of those fundamentals.
And of course, Joe, the markets have been able to take some comfort in the fundamentals this week as well. I mean, all in all, mixed reports from the banks, but things are holding up pretty well. And I think the takeaway is that we're looking at a resilient economy as far as the CEOs are concerned. TSMC confirming the AI boom is intact and going strong. What have you made of what we've heard so far?
Yeah, I would say the economic data has been better than expected. Look at jobless claims today, came in at 207, and if you look at kind of the 4-week moving average, sub 210, that's pretty good. It does show that, while we're in a job market where there's not a lot of hiring, there's also not a lot of firing either. Yes, we do get some of the AI-related cuts. We get that from Snap today. But I think for the most part, what this is showing us is that the Fed has a little bit of time, and I think this has taken some of the pressure off the Fed, and I think that they have the ability to kind of keep an eye on inflation without having to worry too much about the job market at this point, because we've at least seen some stabilization there, and I think that that's an important point going forward. And I think that the markets are looking at that. And even though rates are up a little bit today, it's nothing too shocking given the data that we've seen.
Okay, jobless claims at 207,000 on the headline this morning. And Liz Ann, just if I can get your thoughts very quickly on what you've thought of the earnings so far and what's likely to come as well as far as your expectations.
Yeah, so far fairly decent. What's been remarkable is how strong the upward revisions have been to calendar year 2026 in the face of the war. So in January, you were at about 15% expected growth. Now you're at 19% expected growth. All that said, there has been a deterioration in estimates for the first quarter that we're reporting right now. So that's something to be mindful of. And what's ironic is most of the haircut to earnings for the Q1 is actually from the energy sector. So I think analysts may have just gotten a little bit too optimistic in terms of where numbers would fall out.
Understood. Liz Ann Saunders, Chief Investment Strategist, thank you so much. And my thanks also to Joe Mazzola, Head Trading and Derivatives Strategist over at Charles Schwab. All right, moving on. Coming up, it's time for the Morning Trade, and we will take a closer look at TSMC off the back of this report card. Morning Trade Live will be right back.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our Investing Webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
We're back on Morning Trade Live. Let's focus on TSMC, down so far today, but up 20% year to date, as you can see on this chart here. It's been a steady climb, and the company reported its earnings this morning. That's the focus of the Morning Trade. Joining us now for a closer look at these numbers is Marley Caden. Good morning to you, Marley. Obviously some very nice numbers, but interesting reaction. I'm just wondering what you can put it down to, whether it's to do with the discomfort in the market around the higher spending or just pure sell the news type of event here.
Yeah, maybe a little bit of both, Sam. But first, let's walk through the numbers because they are really impressive numbers, despite this small move to the downside that we're seeing right now for TSMC. They saw a 58% increase in their first quarter profits. That went up to what equates to $18.2 billion. That marked its 8th straight quarter of double-digit growth, also its 4th consecutive quarter of record profits. Revenue came in at $35 billion. Both of those were better than expectations, handily beat them. Their high-performance computing division, that includes AI and 5G applications, was the majority of sales for the first quarter. That was about 61% of overall revenue. Also, the company said its advanced chips, that's defined as anything 7 nanometer or smaller, made up about 74% of Taiwan Semi's total wafer revenue in the quarter. Shipments of chips under 3 nanometers accounted for about 25%, but those smaller nanometer sizes signify more compact transistor designs, which has greater processing power and efficiency. So there's really a push into that smaller design. And TSMC said it's expanding those smaller designs, that 3 nanometer wafer, which it uses to produce AI chips across Taiwan, the US, and in Japan, allowing it to mass produce greater quantities over 27 and 28. Those 3 nanometer production plans are also part of that $165 billion planned investment in chip factories here in Arizona. The CEO of TSMC, CCY, said AI-related demand continues to be extremely robust, to use his words, adding that AI is driving increased computation and thus demand. They have strong signals, they say, positive outlook for customers, reinforcing its convictions in a multi-year AI growth trend. They also forecast their full-year revenue in U.S. dollars would grow more than 30%. That's an adjustment from growing to about or just under 30% previously. Meanwhile, projecting second quarter revenue of $39 billion to $40.2 billion, which would be a 10% sequential increase. So again, a potential another double-digit quarter of growth there. During the earnings call, the executives also announced that they are adding an advanced chip fabrication plant in Taiwan as a part of those expansion efforts. And back in January, they said they expected CapEx to rise as much as 37% to between $52 and $56 billion this year, reflecting those expansion efforts. Now the company says CapEx will be on the higher end of that range. So that's potentially one little trigger point, Sam, why we might be seeing a little bit of a pullback is that increased spending, but demand does appear to be there. There were some concerns also about some supply chain disruptions, particularly tied to key manufacturing materials like helium and hydrogen, but executives said that they don't expect any disruption because of the conflict in the Middle East, and they actually have their own emergency reserves in place if needed. So they call it their safety inventory, so no potential impact there either, Sam.
Good to know. Marley, thanks so much for breaking us down the details and the reaction. Let's trade this name now with Joe Tigay, once again portfolio manager of the Rational Equity Armour Fund. 2 from 2. Joe, how lucky are we? How would you approach an example trade for TSMC?
Yeah, I take advantage of the pullback we're getting here. Great numbers, great report. Love the future. Now, that said, the market's come a long way in a hurry. The market reached briefly an all-time high here, so maybe a little bit of pullback is in order just on the very short term. But I think this rally is going to continue through May. Now, obviously, I don't have a crystal ball. We don't exactly know what the future is going to bring, and there are a lot of risks, as we know, all out there in the world, so the market can turn around in a hurry. I think options are a great way to play this, to look for the rally to continue through May. Maybe we get a nice little rally here, sell in May, go away, come back looking in the fourth quarter here for some more upside. So that's what I'd be looking forward to here, looking at the 380, 420 call spread in May. Anywhere from $8.50 to $9 is about where it's trading.
Okay, good stuff. Thoughts on the overall market today? Obviously taking a little bit of a breather. Oil has picked up a little bit off the back of Iran's pushback here, talking to Pakistan with some conditions for the US, but certainly nothing short of quite an impressive record that we hit yesterday and into the open this morning, Joe.
Yeah, oil's still trying to find a price. The conflict certainly has not ended. Oil is off of much higher levels we saw last week, so the market still is on solid ground there. I think really good news came earlier in the week from banks saying the market, the economy really is still on solid ground, not really seeing any cool off in the commercial or on the retail on the consumer side. So really good news coming from banks yesterday. So I think this is just a little bit of a breather, a little bit of a pause before we see what's going on next. And the volatility front, yeah, that's up again today, up pretty big. We're still below 20 right now, and 19 in the VIX. So it makes a lot of sense to see this little bit of a reset, just kind of a misunderstanding or just kind of an understanding of where we are in this market. We had a great rally off of the lows, now to all-time highs. Now just kind of pausing and seeing what's next.
All right, we'll be waiting, Joe. Always appreciate it. Thanks for your thoughts on the example trade for us on TSM today. Joe Tigay, their portfolio manager of the Rational Equity Armour Fund. Coming up, we'll take a closer look at the sectors on the move this morning and the international headlines impacting global markets as well. Morning Trade Live. We'll be right back.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Vardas, coming to you live from the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning. So I'm joined by Alex Coffey to run us through what he's seeing. And it seemed like we were looking at more of a defensive type trade this morning, but I am seeing a little bit more green on the screen today beneath the surface. Just walk us through what you're seeing there, Alex.
Yeah, I don't know that today's story's been written just yet, Sam. It's a bit of a tug of war when you look at the breakdown of performance today. Not a lot of big moves and a pretty mixed market. So you have four sectors lower: financials, healthcare, industrials, and consumer discretionary, but none of them are down by over 1%. On the flip side, of the other sectors that are higher, energy is leading, and even with its leadership, it's only up about 1.2%. So very easy to visualize this when you look at the heat map, because you don't see a lot of bright colors on the screen. So this is a day where if a news headline breaks one way or the other, you could really see a strengthening of one side or the other as it kind of breaks one way. So too early to say which way that would be. It's not uncommon as we get to all-time highs again for the market to kind of take a breather, reassess, especially given all the uncertainties that still remain. It's just impressive that we got back here. Right now, though, about a 53-47 breakdown between advancing components and declining components for the S&P 500, which is just another way to illustrate exactly what I'm saying, which is it's a very mixed session.
Yeah, you can see that push and pull on that heat map there. And I mean, I suppose that is very much self-explanatory through the equal weight just up fractionally, but the S&P 500 heading in the other direction by about a similar amount. It's interesting when you look at some of our heavy hitters. I mean, you know, TSMC and both ASML, which were out with not too shabby earnings this week, both lower by 2 to 4%. Nvidia managing to snap that 11-day winning streak. Let's see if that holds today as well. But most of the Mag 7 actually in negative territory for us this morning. Just walk us through what perhaps might be driving some of that, Alex.
Yeah, when you look at that particular space, Microsoft is certainly the star, which we haven't been able to say really until the last week as it's making a bit of a comeback here. But not a lot of bright colors, but just simply because the weight of some of these names is so significant, what you're seeing is actually a pretty dramatic outsized influence as far as movement. Right now, you're seeing basically the entire S&P downside today being able to be contributed just to these names. So something to watch if they are able to recover, or if, of course, that weakness does strengthen a bit, it could really pose a drag. So right now, if you were to index the Magnificent Seven, down about 0.6%. Which is certainly putting a bit of a lid on just this market trying to stage a rally and set more all-time highs.
Yeah, and the IGV up again. There's just no letting up for that software ETF either, so something to keep an eye on. Alex, thanks so much for breaking down the moves beneath the surface for us today. Let's turn to some international headlines now. Japan's Nikkei 225 becoming the latest Asian market to wipe out its Iran war losses overnight, closing at a new record high. The index is now less than 1% away from the closely watched 60,000 mark there. China's economy grew 5% in the first quarter, beating economists' expectations and coming in at the higher end of the government's full-year target. Chinese exports have continued to be the main growth engine as the internals have struggled. That's been helpful for industrial output, which did beat expectations in March, but Chinese retail sales slowed last month and fixed asset investment missed expectations as the property sector continued to drag. The UK economy also surprised to the upside in February. According to preliminary data, GDP grew 0.5%. an acceleration from January. While the numbers were better than expected, though, analysts say it could be seen as stale data, as it was before the Iran war. The IMF says the UK could be the biggest hit to growth from the effects of the Iran war of all the richest economies. And those rising energy costs from the conflict are already showing up in inflation reads. The latest numbers out of the Eurozone showing prices hitting their highest level since July 2024 at 2.6%. That's up from February's reading of 1.9%. Coming up, it's time for Inside Out, and we'll take a closer look at Netflix for you, bring you an example trade as well when Morning Trade Live returns.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
We're back on Morning Trade Live. Here's a look at companies with major streaming platforms. Of course, Netflix is set to report tonight. We'll get across those in a second as far as the expectations, but Disney's just on the line. Paramount, Skydance, Comcast higher today. Apple and Amazon are lower on the session. So it's a bit of a mixed picture across our major streaming platforms right now and the stocks, but Netflix very much is the focus right now. Trading at 108 and change ahead of this report card tonight. And as I mentioned, we have come a long way, of course, since it was out of the bid for Warner Brothers Discovery, which perhaps says something up 15% year to date. So let's go inside out on this name. Joining us now is Kenneth Leon, who's the Global Director, Industry and Equity Research over at CFRA. Kenneth, always nice to talk to you. So obviously we're going to be going into this report card with that major sort of overhang on the stock. It felt like, behind us now and less distraction. I suppose investors tonight can focus on the fundamentals this time.
Great to be with you. Yeah, you're absolutely right. Focus on the fundamentals. Just to kind of table stake here for Netflix, it's one of the largest growth stocks. It's the third largest in the communication services sector after Meta and Google. Additionally, when we look at Netflix for growth fund investors, this is an important company that historically has really been driven by organic growth. We still see that 15% or so revenue growth, wider margins, which means much higher profitable growth for the company. Additionally, for Netflix, it's getting back to what they do well, which is essentially is focusing on an amazing business, a platform that can generate revenue and has pricing power.
Okay, I see you've got a buy rating here with a $115 price target. What gets us there, Kenneth?
Well, the good thing is where we were. So, prior to walking away from Warner Brothers Discovery, this was viewed to be a bad strategy, a bad use of management and company resources. I think momentum here will likely see a slight earnings beat. Revenue, again, the bar is really 15% plus revenue growth. If it's a little bit lower on a quarterly basis, we're coming to the second weakest quarter of their fiscal year, much stronger in the upcoming quarters. Now, what they're doing, though, is I think their messaging is getting very focused on key country markets. One that was in the news was South Korea, on how they're changing some of their general entertainment. And what we haven't heard from this company, either from the standpoint of creation of content or operating efficiencies, is AI. So I expect that will be coming in. This company spends $17 to $18 billion a year on new programming content and episodes. They do a little bit in terms of live sports. So I think it's back to who Netflix is. And I think the message from Netflix is we have a lot to keep ourselves busy inside the house.
And what are you looking for in the guidance tonight, Kenneth, particularly in light of the recent subscription price hikes?
They got a number of levers there. The price hikes has been, to my point about pricing power, for their premium subscribers, which matter the most. And then, of course, those can go downstream to lower monthly subscription rates on ad pay. Now, when you look at geographies, you want to see some good growth in what they call UConn, which is US and Canada, or in Europe, because the average revenue per customer monthly subscription is much higher than what they can get in Asia or Latin America. So that's always important in terms of the quality of revenue growth they're getting, which goes to the bottom line.
Okay, so looking out for that FX as well. Interesting announcement just this week about Netflix Playground. Don't know how much of that we're looking at as far as some color, and obviously just around the live part of the business too.
Yeah, it's an area where they mostly invest on a toe in the water. They're not going to compete with other media companies related to the NFL, as an example. They're selectively there with a few games. What they're trying to do also is curate stories or new programming off of sports, which has worked well over many years. So I think with sports, the question always is, how much do you have to put up and what's the return to them, which is mostly subscriber growth, but then now, importantly, is advertising revenue. And I think what we're going to hear tonight is advertising revenue expected to be well over $1.5 billion of revenue recently, might have a higher run rate.
Okay, we'll be watching. Thanks so much for the preview. Really appreciate it. Kenneth Leon from CFR Ray, Global Director, Industry and Equity Research there. Let's trade Netflix now ahead of this report card with Tom White, host of Fast Market. Very good morning to you, Tom. How would you approach this one?
Well, that run up from those February lows kind of puts, the stock into better light going into these earnings results. The option market, because of that run up that we've seen, implied volatility levels, while elevated going into this report, have pulled back somewhat as the stock's up over 40% from those February lows. So option market priced in at about a plus or minus 6.5% move either way, about $7 on a dollar basis here. So I looked at a strategy that just takes advantage of the elevated volatility with the expectation that maybe it stays range bound, but doing a risk-defined trade. So you know exactly what your downside is going into this. Went out to the April 17th monthly options. They expire in just one day. This is a pure earnings play here. We're going to sell the 108 strike call and the 108 strike put. So you're selling a straddle there. And then we're going to buy a strangle against it to make it risk defined. We're going to buy the out of the money 100 strike put. And then on the upside, we're going to buy the 116 strike call. So a short $8 wide iron condor. We sometimes call this a short iron butterfly because you're short that same common strike on the call and put on the 108 strike. You're going to collect a credit of about $5.60 on this trade. That's what you can potentially make on it. And that makes your risk on this one just over $200 here, but that's all the way below $100 on the downside, all the way above 116 on the upside. So you've got a nice wide range between those break evens of about 102.40 on the downside and 113.60 on the upside to remain profitable on this type of position. So this is just setting up for a collapse in implied volatility tomorrow. You're going to be short that 108 call and put here, so you're going to have some assignment risk. So the idea here is you sell it for 560 and you buy it cheaper as long as it remains below or between those break-even points here on this type of trade. But yeah, neutral strategy. Not, we always talk about bull and bear as far as directional moves go. This one, same type of situation. You just want the stock to consolidate between those break-evens over the next basically 25, 30 hours.
Okay, it looks like the setup is looking pretty good as far as going into this report card, particularly as far as what the analysts are saying as well. Tom, thanks so much for the example trade on Netflix. Up 0.3% as we go into this earnings report. And taking a look at stocks this morning, wobbling a bit off the back of these record highs that we set on the S&P 500 and the NASDAQ. We've picked up a little bit of steam as technology seems to be gathering some pace right now, particularly across some of the chip names, some of the software names as well. Microsoft, the Dow Jones are continuing to slip here just marginally, and the Russell 2000 underwater by 0.2%. So we're mixed, we're range bound as we continue to look at oil this morning, up about 2% or so, $93 on WTI. We've got Iran pushing back, talking to Pakistan around conditions for the US, so something to keep in mind. Thanks for joining us here in Morning Trade Live. You've got Trading 360 up next with Marley Caden.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Happy Thursday. We're 90 minutes into the trading day, and welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. We've got a lot for you coming up in today's show. One of the big stories, of course, this Allbirds stock soaring yesterday after announcing it sold off its footwear business and is pivoting to AI. Our 360 Spotlight will break down the news there, why it also shouldn't have been a surprise to some investors. Also, Taiwan Semi trading lower today despite a beat on both the top and the bottom lines when it reported earnings overnight. Kevin Green will join us to take us through the numbers and have an example trade for us in our disruptor. And then in our 360 round, our panel will take us through the earnings for PepsiCo. The food and beverage company had revenue grow 8.5% in the quarter and saw its North American unit grow for the first time in 2 years. Lots to talk about this morning, but let's take a look at how the markets are faring as we're into the trading day a bit this morning. As we take a look here on the board, the S&P just above the unchanged line at 7024. On the NASDAQ, we're at 26,247. That's up more than 0.1% right now. For the Dow, just marginally lower at 48,432. And the Russell 2K down about 0.2% at 2708 right now. As we take a look at the 10-year here, see how that's moving today. We're slightly higher, but still under 4.3. We're at 4.29 right now. The dollar also slightly higher, 98.09. For gold, just a bit lower, 48.1260 a troy ounce. Crude oil still within that range we saw yesterday, about 93.33 a barrel right now. That is up 2% though. And Bitcoin also still range bound, 74,120. Just can't seem to find its way to stay above that 75,000 mark for Bitcoin. I do want to welcome in Alex Coffey, though, our first guest, to take a look at some names that are on the move today. And Alex, I feel like on a near daily basis, we're talking about expanded partnerships, and Oracle seems to be a name that keeps coming up, and they're back in the headlines again today.
Yeah, this one's pretty fascinating. I think it's an important one for something that we've heard as a sort of a macro trend, which is big businesses looking for resilient kind of digital systems across multi-clouds. And this is going to help with that. And so Oracle and AWS announced a collaboration to expand multi-cloud networking capabilities by establishing connectivity between Oracle Interconnect and AWS Interconnect. So two of the biggest players looking for a way to essentially connect together. Now, this new capability would provide customers with private, simplified, high-speed connectivity between OCI, Oracle Cloud Infrastructure, and AWS, Amazon Web Services. Again, two of the biggest cloud providers on the planet. This new capability would also allow this collaboration to support both full and split stack multi-cloud deployments, enabling customers to run applications and move data seamlessly between the two cloud platforms. And it's expected later this year and is expected to roll out in the AWS US East region first. So looking at maybe some of the big companies up in the Northeast as a potential beginning rollout. So all in all, I think an interesting story, but the bigger story to me has been the run that some of these software stocks have been on over the last couple of days. I talked about Microsoft, but Oracle also a part of that list. Something like $35, even more than that, $40 in just like the last 3 or 4 sessions.
Yeah, and it's very interesting too to look at the moves. Oracle continuing this nice pop we're seeing on these other deals that it's announced recently. Amazon moving slightly lower, but I saw a headline earlier that called it the best of frenemies when it comes to these two, because they are competitors, like you said, but a pragmatic choice because you're combining two of the biggest players in the game here. So I'm wondering if we've heard from any of the analyst community yet, in terms of adjustments or commentary around this deal.
Yeah, we have a little bit, and I'll build on sort of that thought, because if you think about businesses, they're trying to find resilient systems. They don't want a CrowdStrike situation. They don't want a situation where if Microsoft goes down for whatever reason, their business can't access their information. So they're building these systems through multi-cloud providers. And so this connection allows for that seamless transition between the two. But one analyst out of Bloomberg talked about this enhanced networking capabilities between these two is actually reducing the threat for Oracle to potentially lose market share in their data center business, or database business, I should say, so that this faster connectivity expands this partnership and allows these companies to continue to build out these multi-cloud stacks. AWS was already seen as a company that was doing well in this space. This just gives Oracle another way to connect to AWS, which for small and medium-sized enterprises, it's the go-to is AWS.
Yeah, and another nice pop for Oracle today on another expanded partnership here, up 3% more. Amazon trading down less than 1% right now. Thanks to Alex Coffey, our senior equities contributor, for breaking down the latest there for us. I do want to welcome in our next guest, though. Take a broader look at the markets right now. Joining us, David Wagner, the head of equity and portfolio management at Aptus Capital Advisors. David, great to have you with us. I'm just checking the numbers here. We're at 7,029.25, so we're again in record territory here on the S&P. What is driving this resilience that we're seeing in the markets, despite the fact that we still have geopolitical uncertainty right now?
Yeah, it's really hard to get a good market down. Obviously, we're in rarefied air right now, hitting all-time highs on the market. And I think two things are really driving it. I'd probably put about 80% of the contribution is probably coming from earnings and about 20% from valuation. And if we actually look at the earnings picture for the U.S. domestic markets, it's the best out there. And obviously a lot's going on right now in Iran and everything with oil, and that's potentially causing a growth scare in the market. Well, I would say a growth scare internationally, not here domestically. And when there's a growth scare out there in the market, what do investors do? Well, they flock to where the growth is. And right now, there's no better growth in the entire globe than the United States of America. We're expected to grow earnings in 2026 by the tune of about 17%, and that's better than what you're seeing over there in the Europe side of the picture. Maybe not on the EM side because they have a lot of concentration with HK Synix, Taiwan Semi, and Samsung itself. But we're getting more broadening growth here in the United States, and I think that's what's really driven this market back. But I would want to say one thing. I think the favorite stat that I have out there on the market right now is that during market pullbacks, you can bifurcate market pullbacks, ones that are growth scares and ones that are not growth scares. What we witnessed during COVID and the tariff tantrum of last year, those were growth scares. We're not seeing a growth scare here in the US right now, so I'll put us in the other side of the equation. But when you get a pullback during a growth scare, the average pullback for the S&P 500 is close to about 16%. When you get a pullback that's not driven by a growth scare, the average pullback's about 9%. And if you look back, since the March 30th bottom, the max drawdown we saw was about 9%. So right in the zip code or the area code of what we've seen on a historical pullbacks. And you couple that with a depressed valuation for the S&P 500, and that's, in my opinion, we're trading below the 5-year average and right in line with the 10-year average from I think we're trading like 19.7 times. I think it just sets you up for a recipe for success and a recipe for a pretty strong bounce back, which we've seen over the last 11 trading days.
All right, so with that said, I read through the notes that you sent over before talking with me today, and you highlighted a disconnect, that stocks are rallying, and it's a very strong rally, earnings-driven in some ways, but Treasury and oil aren't confirming the rally right now. So what do you trust more here?
Yeah, they're not conforming the rally whatsoever. It's kind of like the old Wall Street question, like who's smarter, the equity markets or the bond markets? What we saw during COVID, we actually found out for the first time in a long time, the equity guys were actually smarter than the bond guys. We have John-Luc Tyner on our team. He heads our fixed income, substantially smarter than me. I had equities, but it feels like the equity guys have been more pragmatic about this market and recognizing that consumers here in the United States, they can deal with $100 oil much better than, what we had back in the early 2000s when, the U.S. invaded Afghanistan or back on the oil embargo of 1973. We obviously know the U.S. is a net exporter of oil right now, and the consumer is very strong. So I think that the equity guys, the fund guys, the smart guys, I think right now are just recognizing that we're heavily insulated from a consumer standpoint right now, that I believe that the equity guys are actually smarter than the bond guys right now.
So, David, do you have any concern then, with consumer spending still showing up strong, that we're going to see energy prices start to put pressure on the consumer going forward?
Well, that's what the Treasury markets are kind of telling you right now, that there's going to be some type of inflation scare. You've seen rates go higher. We're about 30 basis points higher on the 10-year Treasury today than where we were, before the war started. And that's more of a signification of this is an inflation scare in the minds of the bond guys, not a growth scare, in my opinion, right now. But, if you look back, over the last 10 years, the average net wealth of the U.S. household in the United States, we're about 95% higher than where we were 10 years ago. If you actually go back to pre-COVID, we're about 40% higher than we were just 6 years ago. So I think that, the market on the equity side is digesting the fact that the consumer can handle it.
And there's a lot to digest here, but from your viewpoint, what's the bigger risk right now? Rates staying higher for longer or growth slowing more than expected?
Growth slowing more than expected right now. I think a lot of the charlatans on Twitter or the bears out there, I have a saying, bears sound smart, bulls, they make money. And I think a lot of what people are worried about right now are not just higher energy prices, but the input cost from a manufacturing standpoint or the fertilizer side on the food side, driving earnings growth down from a margin perspective. But we did a study that if, the barrel of oil stays at $90 for the entirety of 2026, you're going to see about a degradation of earnings of about 5%. And we're already kicking well above our weight class from an earnings perspective, growth perspective at 17%. And I do math for a little. I'm not great at math, but if you take 5% off 17%, you're at 12%. That's still, well above the historical average growth rate for the S&P 500 of 9%. But I think we see a little pullback on AI spending and couple that with some higher than expected input costs, which I'm not expecting whatsoever. I think that could cause a short market pullback in the future.
All right, and David, we're running tight on time, so I do want to ask about your new ETF before we have to say goodbye. You launched this new buffered strategy. So take us through how it fits into today's market environment with us near record highs.
Yeah, no one would think a firm out of LA, and that stands for Lower Alabama, is innovative from an ETF perspective as Aptus Capital. But I would say these ladder buffered ETFs that we just launched here this month, we're very excited for it. And I would put it in the basket of if you have some clients that are maybe cyclically nervous or just nervous about geopolitics, these are great vehicles for your clients to invest in. And I think what makes me so excited about our buffer lineup is that we are, in my opinion, I have to say that substantially cheaper than a lot of our peers out there. Our newly launched laddered buffered product, the ticker's ABUF, it's 30 basis points. So let's just call it 60% less from an expense ratio perspective than our peers. And I think the best way to explain that to people is like, where do you want to buy your Cheerios? Do you want to buy your Cheerios at Trader Joe's, or would you like to buy your Cheerios at Walmart? And what we've come to find out, Cheerios are actually cheaper at Walmart than they are Trader Joe's, yet it's the same exact product. So I think if you compare Aptus's buffered suite, even the newly launched ladder buffer, we're basically giving you the same exact product for about 1/3 the cost.
All right. Well, David, we really appreciate you joining us. Sadly, we have to leave it there, but we saw new records on the S&P and the NASDAQ today. A great day for you to join us. David Wagner, Head of Equity Portfolio Manager at Aptus Capital Advisors. And we've got plenty more for you today on Trading 360. Next, we've got the big three coming your way. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the technicals. Dan Deming joining us today to take us through the trades for Pfizer, Visa, and Synchrony Financial. That's next on Trading 360 on Schwab Network.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time,
Opening Bell, live at the NYSE, right when it counts.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab as everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades for you. Rick Ducat joining us as always to take us through the charts. Here to take us through the trades today, Dan Deming, the managing partner at KKM Financial. Dan, great to have you back on the show and on another record-setting day here. You know, what are your takeaways on this impressive rally we seem to be holding this week?
Yeah, I mean, very impressive, Marley. And, the momentum here is certainly significant. And the fact that, we're still holding a gain once again today after a little bit of, some back off after the initial strength and, right at this top end of the range, the fact that we've been able to recover from the morning selling pressure, we'll have to see how it works its way through the market the rest of the day. But very impressive from a relative strength standpoint, resilience in the market. And yeah, here we are at all-time highs. Did not see that. I don't think anybody really saw that coming a month ago. Now, we did see the possibility for some higher price action, but this momentum is certainly breathtaking.
Yeah, most of the forecasts had these numbers being reached far later in the year than April for sure. But let's jump into the big three now. You've got a pharmaceutical here for your first pick. You've got Pfizer. We've got their earnings coming. We've heard from a lot of headlines from some of these names of late. Why Pfizer?
Well, just because, this stock finally has found some traction and shown some relative strength here after, last couple of years it struggled. But, now we're seeing that rotation take place. It's really started last fall. Pfizer's been benefiting from that. And I think, we've got a little bit of a pullback here to a level where I think when you look at longer term, this is a potential entry point. So that's why I wanted to focus on Pfizer today, because of the recent pullback. And I think that we are going to continue to see this momentum work the stock higher over the year.
All right, Rick. So as we look at the technical setup for Pfizer, what are you seeing in terms of the action here?
Right, so first we had a repeated test of a resistance area roughly around these old highs, 2750, 2775 or so. We tested it several times. We had a breakout that took us into our new highs, 2875. And here's the pullback that Dan described. We hit our lows near about 2670 or so. We also had a bit of a range-bound area here, 2635. So now you could say that, well, we do have a series of progressively higher lows. Broader picture, too, is that we have an overall uptrend on the year that's still in play. So now when we look at our moving average picture here, we can see that we are kind of hanging out near the confluence of our 5-day and 21-day EMAs, dark blue and teal, respectively, both coming in around 2730 or so. Just below that, our gold 63-day EMA comes in at 2690. So these are some potential areas traders may have their eyes on if we do give back a little more of these gains. RSI, kind of consistent here, not really making any great strides one way or the other. I think you could say that we have a very modest, very slight uptrend for the most part here, but for now, below that 50 midline, 49.70, just a hair below that bullish crossover. Finally, we have our volume profile here, which suggests that there was a node of heavy trading activity here between about 27 to 2750. So if we start to push above that 2750 mark, that's where we could start to see faster moving prices. There's a bit of a gulf in our trading area here, and then things start to pick up, notably again around the 26 level, the volume profile point of control, much lower though, 2468 is where that one comes in.
All right, Dan, so as we look to trade Pfizer, how long are you playing this for? Are you including earnings in the trade here?
Yeah, Marley. The idea here is to own the stock longer term and then have the ability to collect some premium. Now, if you see some significant strength over the next couple of months, then possibly make a decision if that's a level that you want to close the position. But today's trade example is a buy right buying the stock here at these reduced levels as it's come off, and then writing the June 29 call. You can sell that for about 43 cents. It's about 1.5% return versus the stock over the next 63 days. So I'm looking out for 2 expiration cycles. And again, to capture a move back towards the highs, and potentially, if we continue to see a slow move higher, own the stock longer term, because it's certainly uptrending and also it generates a nice yield. And again, just creating a synthetic yield by writing this call above it, and then having the option at that expiration, if we're above there, to make a decision if you want to close the position or just roll the position out.
All right, so let's move on to your second pick here. We're going to change sectors here, go into financial services and talk about Visa. Different chart here, down year to date, down over the last 52 weeks. Why Visa, Dan?
Well, I think we're seeing a bottom coming in now, Marley, and certainly it looks like it's back above some of its key technical levels as it's found some renewed strength. And it's broken that downtrend line. So I think that, Visa certainly was thrown out along with a lot of the other names that now have come off those lows and now show significant relative strength. And I think Visa is going to continue to benefit just from the general trends and the fact that it got probably undervalued in that heavy sell-off that we realized over the last couple of months.
All right, and yeah, definitely taken down too by some of that credit cap limit conversation as well, had some of that pullback there. But as far as finding support, are you seeing that in the technicals also here, Rick?
For now, we do seem to have established a temporary bottom here, around 295 or so. The absolute low came in just below 294, 293.89 here. So our downward trend line has been broken, though. See this blue trend line that we have connecting our highs? We have pushed through that. Now you could make this shorter term upward sloping trend line in white. So some downside levels to watch. 303 marking a recent low point here. And then, as I said, around 295. That's roughly where we had our worst close. To the upside, meanwhile, 321 was where we had a low close during one of our declines back in November or so, and that was a notable low point. We had our breakdown. Then it became a subsequent high point. The old support became new resistance. So this level here near 321 stands out as a possible area to watch to the upside. From there, 338, a notable high, and here 347, the beginning of a gap after our post-gap downward. That was the high point here, so that would be another level to keep on your radar if the move upward starts to accelerate. So now we find ourselves near our 63-day EMA on this chart, our gold quarterly moving average near about 315.40. So we've crossed above our shorter term moving averages. The short term blue 5-day diverging apart from its slower peer, the 21-day teal EMA. So that's a sign of a trend change here. So shifting from more of a downward trend to an uptrend here. The next source of potential resistance based on our moving averages is our long-term 251-day EMA in orange. That comes in just above 327. RSI also improving, continuing to make new relative highs and also crossing above the 50 midline here. So that's more of a bullish development here for traders to consider. Our volume profile here shows that the volume area that was established here between about 302 to 310 has been broken. So now the next area to watch, perhaps around 325 to 330 or so. There's a spike in our trading activity there, according to our blue bar graph on the right side of the screen, showing the heavy trading areas.
All right, Dan, so as I was just looking at the earnings date for Visa, we've got Visa coming up in less than 2 weeks. So does the trade include the earnings date?
It does. Yeah, this one does. This is, and it's short dated too, so it's just within the earnings cycle here as I'm just looking out a month. So basically, I believe it's 29 days as far as the May expiration. So, and Rick pointed out some of the key levels that I saw when I was looking at identifying a potential trade here for Visa. And so today's trade example is buying a call spread, buying the May 320, 335 call spread, but then selling the May 300 put below. And basically it brings into those key technical levels where if we see some weakness, you get a buffer zone down to that 301 level, which is just above the recent close, the lowest close here in some time. So it's a level I don't mind putting into the stock if we get down around that 300 level. And if we see continued upside momentum, it reduces the cost of the call spread, allows you to capture pretty much the entire range from 321 up to 335 should we see continued upside momentum as we move through earnings and into May expiration.
All right, right now, Visa pretty much unchanged on the day. We're about 315, but down about 10% so far this year. For your last pick, we're going to stay in financial services, but this time with Synchrony. Why Synchrony?
Well, again, just a shift in momentum, a name that has shown some tremendous strength over the years and then has now realized some selling pressure as well, as we've seen financials in general come under some pressure along with some of the other sectors in the market. And again, I think it's just poised now that it's going to continue to recover after realizing some valuation levels that are more compelling. And again, a reversal in trend is the other reason why I identified this name today.
All right, yeah, and you can clearly see that, as we look at the chart, at least year to date, a really strong start to January. Then we sort of started to fall off, and we can start to see some of that recovery there, Rick. But what are you seeing in terms of the technical setup here? Because they also have earnings, I think, on next Tuesday.
Yeah, the 21st is when the next earning event is. But this is an example of why we try to keep track of these gap levels here, because you can see, although this was a smaller gap, this is around where we bottomed out. So the gap was filled near that 64 level. You could say that then we broke through our downward sloping trend line here in blue. Now we have another gap to the upside to consider. It's a far larger one here, spanning between about 81 to 87, but still that would be one notable level to keep on your radar to the upside here. Another gap formed here near about 72. Now, after our gap to the upside that we formed just very recently, about a week ago or so, that stands out as a potential low point to watch out for. Price has been traveling in a very narrow, very tight upward channel type shape between our two white lines there. So, we'll have to see if that can continue heading into earnings or if that trend line will be broken. In this case, our moving average, our 5-day dark blue EMA, 74.64 is where that one comes in, fairly close to our trend line here. So that gives us a bit of a confluence to watch out for a potential breakdown. Meanwhile, our three longer term EMAs come together pretty close to each other here around the 70 level or so, 70, 71. So again, that gives us perhaps a bit of a safety net if we do start to move lower, that many traders could be looking out for support in that area. RSI still in the overbought area and still mostly sticking to our trend line here. So look for a crossover below that 70 level for signs of slowdown. Finally, volume profile shows we are on the verge of crossing out of this heavy trading area, the biggest one on our chart by far, between about 69 to 76 here. The point of control comes in near 71.83. If we were to keep moving higher, two smaller nodes stand out near about 80 and 84 or so.
All right, and Dan, as you look to trade this name, what strikes were sticking out to you? What levels were you watching?
Yeah, again, this is due to the fact that SYF does not have a lot of option volume. Again, I was looking at just a buy right trade example today. And giving it a little bit of time here out to June again, getting through the earnings announcement next week, but also just kind of possibly capturing that move back towards those highs that Rick pointed out. And so buy writing the stock and then so looking to write the June 85 call here for about $1. Generates some yield over the next 2 months. Gives you a capture zone to the upside, and also at that point it basically has those levels in play that are the recent highs that we did see in January, where again that could be some resistance. So if we were able to get there, might be a point to exit and be able to capture this move back towards those highs and then have an exit strategy.
All right, well, as you pointed out, Synchrony has some momentum, up about 18% over just the last month, but still down overall on the year. Dan, want to thank you for being with us for Big Three today. That's Dan Deming, Managing Partner at KKM Financial. And of course, thanks to Rick Ducat, our lead market technician, for always being with us. Coming up next, we are going to spotlight Allbirds and its shocking transition into the AI space. Stay with us.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
My man.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab Coaching is concepts brought to life in the real world.
It's absolutely world class.
We have coaches who have been in the industry and around the industry for a long time.
We have different formats because people learn differently at different times.
We have webcasts running through YouTube all day, every trading day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible
Get
is
ready
that?
for
And
this
it's free.
giveaway. Let's see what we got. Points. $97.10. Let's see. Add in progress. Add in progress. Fortune. Yeah. Excuse me. Well, the wheel ain't spinning. No, still nothing. Patrick's. Lost 50 points. Yep. Took away 50 points. Let's see what the market says.
Have been pretty good, and that you're going to have the 6th quarter of double-digit earnings growth consecutive, and so that is a big deal. And so with that, we're seeing markets here going back and forth, but certainly a nice move here. The Dow right now is up 32 points, and we continue to watch names like Taiwan Semi, which came out with a bullish quarter and saying that it's their most bullish ever, and they see revenue growth growing by more than 30%. Pepsi cut some prices on Doritos and new Gatorade stuff, so it really some good news for the big picture there on Pepsi. And overall, the takeaway from those banks was pretty good overall. So I think that was also a nice showing as well. Marley?
Yes, certainly. But while I have you, I want to talk about some big news that came out at the end of the trading day yesterday. We finally got a ruling in this Live Nation case, and it did not go in Live Nation Ticketmaster's favor here. Can you take us through the verdict and what the latest is here for Live Nation?
Yeah, and you know what's interesting about this, as you noted, I mean, they already had the settlement with the DOJ where they had $280 million towards some damages. And so some people think that this with the states will then sort of echo that. I mean, the final ruling here from the Manhattan jury after 6 weeks of deliberation and hearing the story, Live Nation, the parent of Ticketmaster, was that they had been overcharging. They really cover so many venues. 34 states came underway here with this, and they're saying that $1.72 extra was charged on certain
So it
tickets
looks like
in 257
NVIDIA
venues.
got close. They got close to the 200 mark.
Target, and they still reiterated their positive. I mean, it's at 159. But the question here is whether or not, and the judge and obviously the jury found this to be true, that Live Nation illegally monopolized ticket market overall, and that's what the jury found. Now, will there be a breakup of Live Nation? Will there be some sort of divestiture? There's no doubt that this company will appeal or somehow say this is not the end of this story, according to TD Cowen and other analysts. So in the meantime, you are seeing the stock hardly reacting. It's up 2.8%, right? I mean, if you're found guilty, sometimes you might have an overhang, but the fact that everybody knew they would appeal and maybe it'll be more like what they saw with the DOJ and sort of settle, we'll have to wait and see. And also, I wanted to add the Dow Jones Transportation Average also hit a record intraday high today. Marley.
Yeah, lots of records. I know a lot of people were waiting for that verdict in hopes that it was going to lower ticket prices for concert goers. But as I was parsing through some of the details, there now is going to be a second trial to determine whether or not there are any remedies warranted and if they will allow the states to then request the breakup of the company or some sort of divestiture here. So no relief in terms of those ticket prices anytime soon.
It's not over yet.
It's definitely not over. Nicole, thanks for taking us through that. Nicole Petalides. Now it's time for the Disruptors. Kevin Green, our senior markets correspondent, here with today's company. We're, of course, talking about TSMC. The company saw its 4th straight quarter of record profit, with the CEO saying that AI-related demand continues to be what he called extremely robust. KG, can you take us through the earnings and the highlights here?
Yeah, this was actually a really good earnings announcement, outside of maybe one comment coming from the executive team. But the company reported revenue at $35 billion. That did beat the street's expectations, and they raised their fiscal year 2026 revenue guidance to above 30% growth for a year-over-year basis. Now, when you're looking at the net income, that actually grew by 58% on a year-over-year basis, and this is because of the artificial intelligence theme. They are still seeing an expansion when it comes to margins, and as you talked about, the demand is very robust at this point in time. That's also causing them to increase their CapEx spend moving forward. Over the next 3 years, they expect the CapEx spend to be very aggressive compared to the last 3 years in order to increase capacity, in order to meet demand here. Now, one of the things that they did discuss that may have pulled the stock back here a little bit and caused a little bit of volatility when it comes to other names that have exposure to the smartphone as well as PC market is the fact that memory chip prices are increasing, and they are actually maybe seeing some demand destruction because of that, but it's only a small slice of their overall portfolio, not the major theme that we have been trading on, but something to keep your eye out on. So we are seeing the shares kind of gyrate here for today, but this was a good earnings announcement. The top line growth beat when it comes to revenue is not really a surprise. We get the updated revenue numbers every month, so that's really not a surprise. But the margin expansion is something that you would like to continue to see moving forward. And obviously, if that's going to be the case, they're going to be able to boost overall profitability. So really decent quarter for TSM.
Yeah, really decent quarter. Still seeing that 2% pullback, though, in response to those numbers. So, KG, if you were looking to trade this for example purposes, how would you structure a trade here post-earnings with the reaction that we saw?
Well, once again, it was a good earnings announcement, but we have seen this type of reaction before, even with Micron. And if you're looking at a daily chart, you could make the case that maybe a double topping pattern could be in place, at least for now, and potentially a pullback in the near term. So I'm actually looking at the May 15th, 360, 330 put vertical spread, buying the 360, selling the 330, doing this for a debit of $9 even. So the max loss on this trade could be up to $900 with the max profit potential of $2,100. Now, the break-even point, $351 even, that also does align with some key areas of support for this name. So this is a little bit more of a bearish take rather than a bullish take, but this could be a situation where we have a buy the rumor, sell the news type of an event, and a pullback could be warranted, and maybe a rotation out to maybe some other companies within the semiconductor space that have been kind of left behind over the last 3 or 4 weeks.
All right, well, Taiwan Semi right now at 230.30, again, down about 2% on the heels of those record earnings. Kevin, thanks for being with us to take us through the numbers and also for the example trade there. That's Kevin Green. Coming up next, it's time for our 360 round. We'll dive into the earnings we got this morning from PepsiCo. That's next.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round to discuss PepsiCo. Pepsi reported adjusted EPS of $1.61, which beat analysts' expectations, looking for $1.55. Revenue came in at $19.4 billion, which also topped the expectation for $18.9 billion. The North American food unit saw volume growth for the very first time in more than 2 years after price cuts on snack brands. Joining us now to take a closer look, Phil Kafarakis, the CEO of the IFMA, the Food Away from Home Association, and Garrett Nelson, Vice President and Senior Equity Analyst over at CFRA Research. Great to have you both with us. Phil, would love your thoughts on this report we got from Pepsi. We're seeing Pepsi move higher, about 2% higher, particularly on that North American growth.
Yeah, it's a great pivot moment for them with the strategic implications that they've been putting in. Volume growth is definitely where they're headed. Big play moving out of pricing. They're adopting to the consumer and the value consciousness of what's taking place. It looks like the pressure from Elliott management is starting to pay off. This is a real prove-it quarter for them, and it looks like the work they're doing not only in pricing, but promotion and then move towards good-for-you food is going to pay off for them. The discipline is going to be in how they're going to get their margins to stay healthy, but their volume growth is really coming back, and it looks like Ramon and the team are onto something here as they move into the back half of the year.
And Garrett, what stuck out to you most on the report? What are some of your takeaways?
Yeah, I think the real theme here was a return to growth. You know, PepsiCo is coming off a year in which their earnings were actually down slightly in 2025. So here you have year-over-year EPS growth of 9%. Was really driven by the top line. Their revenue came in more than $500 million above expectations, and that was really driven by the food and snack division. And it was really, if you look a little closer, really driven by some of the international markets on the food side. Europe, Middle East, and Africa, volumes were up 9%, and in Asia Pacific, their food volumes were also up 9%. So that was the real driver. And I think it's right that, you know, some of the pressure they're feeling from the activist shareholder Elliott management is starting to show up in improved financial results. So it was a positive.
And Phil, you mentioned Pepsi leaning into these healthier products. How important is that as a part of this transformation or turnaround story? And is this a necessary evolution right now?
Yes, totally. They're really plugged into what's happening with the consumer with respect to natural and health. The GLP-1 situation is one they're monitoring carefully. They've gone to a very classic promotion campaign, advertising campaign to talk about the pureness of the ingredients. They're removing some of the colored chemicals that have been in the portfolio for a while. That'll be important for them, particularly as they start to increase promotional activity in food, like was said. North American food really showed a bump. But going into the summer with the World Cup promotions and some of the things they're connected to, it's going to be incumbent upon them to drive value and making sure consumers understand that healthy snacking is something they care about.
And Garrett, margins came in a little bit weaker here than expected. How big of a concern is that for you? And also with this move into the healthier products, which can be a bit more expensive for the company overall, do you see any potential risks to their core high margin business?
Yeah, margins are a concern, no question about it, particularly given the oil spike of the last month and a half or so. Pepsi has significant distribution costs. And I think really the only negative in the release from our view was the fact that they didn't raise full year guidance, considering the magnitude of the Q1 beat. But I think PepsiCo is really just being cautious in light of, everything that's going on, some factors beyond their control. And we really take comfort in the fact that management has such a long history of providing conservative guidance. If you look back since 2008, their quarterly earnings have only fallen short of consensus 2 times. So that's going back almost 2 decades. They have one of the strongest earnings track records of any company. And we view that guidance as, still cautious and potentially conservative.
And Phil, I'd love to get your thoughts on that too. I noticed they didn't raise the guidance despite that significant beat. Is this just a classic conservative management response from Pepsi, or is there something investors should be reading into here?
No, I agree. It is conservative with respect to them being cautious. Again, a very swift move into volume versus price. I think they did, indicate continued growth at 2 to 4%, I believe it was. And margins will be somewhere in around the 6% range. But again, good, healthy, not as aggressive as what's come through this first quarter, but it's a proven quarter, and I think they're gonna make sure they get things done quickly, particularly as they look inside their supply chain and they look at some of those expense bases. The other thing is they do have some risks. They lost a major contract with Marriott, which was a relationship for 34 years, to Coke. And, again, very small part of what they do, but still something they've got to watch out for. And they absolutely know how to manage risk and caution. And I think that we'll see nothing but even greater success with their volumes that'll manage the tick down on margins now. I think it's a longer term play, and they got a lot coming into the summer that they'll be promoting and working on.
Well, really appreciate you both being with us today to take a closer look at Pepsi and the reaction we're seeing in the markets to their top and bottom line beats. Right now, Pepsi is just below $158 and up 2% on the day. Thanks to Phil Kafarakis, the CEO of IFMA, and of course to Garrett Nelson, the VP and Senior Equity Analyst at CFRA Research. I also want to thank all of you for being with us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store. You can also tune in 24/7 on schwabnetwork.com. I'll be back with Market on Close at 3 Eastern, 2 Central, but stay with us. Fast Market with Diane King Hall is coming up next.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab has everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Schwab Coaching is concepts brought to life in the real world.
Schwab Coaching is learning constantly.
It's relatable, it's practical,
Clear, understandable,
and hopefully entertaining.
Take it for what it's worth, but I think it's absolutely world class.
Schwab Coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab Coaching is that clients get access to 9 different sets of expertise.
We want to engage with you and chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see.
We have different formats because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
We've got this ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up on noon Eastern here at the New York Stock Exchange. And we've got a tug of war between the bulls and bears happening on Wall Street, but we're pushing now back to the upside. Once again, chasing records. Let's get right into a check of your scorecard as we hit the lunch hour here on Wall Street. The S&P 500 has a gain right now of about 0.33%. You've got some different names at the top of the leaderboard today compared to yesterday. Energy and real estate pacing the gains, but information technology is in there. That was the leader yesterday. The Dow right now has a gain of more than 0.2%. NASDAQ 100 better by 0.6%. Russell 2000 inching higher by just shy of 0.2%. So you got some buying activity right now within those small caps. Here's the roadmap for today's show. We'll look at example option strategies for Tesla. It's been pulling back today after a big run up this week. Plus, the team from Lightfolio will be along with new sentiment data on Netflix ahead of its results. And Corning is also on our radar today. Now that we've got the roadmap for today's trading action, it's time to bring in my co-host. We've got Tom White in our Chicago studio and Kevin Higgs joining us live from the CBOE. As you know, we've got you covered from exchange to exchange and beyond. So, guys, it feels like Wall Street's trying to read the tea leaves on geopolitical risk. In many ways, looking beyond this between the U.S. and Iran. We're still flirting with all-time highs. The Pentagon, though, saying the U.S. Navy has turned back more than a dozen ships since the blockade of Iranian ports kicked off earlier this week. Tom, how do you make sense of all of this?
Well, I don't know if you have to make sense of it. You take a look at what the equity market's done, the NASDAQ and S&P 500 at record highs, NASDAQ on an 11-session win streak, the S&P 500 up 10 out of the last 11 sessions. So, yeah, the optimism's there. The momentum's to the upside. Good news is coming. They announced a potential ceasefire that starts at 5 p.m. Eastern time today between Lebanon and Israel. And that optimism remains that we're going to get a deal done with Iran, maybe by this weekend. So that's lending some credence to this, to these flows into risk-on assets. But it's kind of interesting today. We're seeing crude oil up 2%. We're seeing yields higher. We're seeing the dollar higher and stocks higher. So are we getting to levels that maybe we're going a little bit too far, too fast? You look at the RSI levels on a technical basis for the NASDAQ and S&P 500. They're both in overbought territory, up above that 70 level. So that's going to probably raise some concerns here. And then you throw on top of it, guys, we're getting good news. Jobless claims came in a little bit lower than anticipated. Although we did see a creep up in continuing claims. The Philly Fed number was pretty good, so that's lending some credence to the manufacturing side. But at the same time, we're expected to have slower GDP growth over the next couple of quarters. And what does that equate to, right, as far as, this move back into equities? That's going to be, I think, a concern moving forward. But, when a trade like this happens where it's momentum-based and it kind of pushes aside any of the potential headwinds, that's when you're starting to get into that lofty territory that you might be concerned about. Maybe not a pullback, but maybe some consolidation warranted at this point.
Okay, so I was looking across the heat map, Kevin, and I'm like, what stands out? Not just in sectors. Microsoft, you catch this move? It's gaining more ground today. It's been, as we know, beaten up. But what catches your eye, Kevin?
I think and Tom mentioned a lot of this. The S&P is up, the NASDAQ is up, but crude oil is up, VIX is up, yields are up, the dollar's up, and so you're getting some mixed signals here from the overall market. And even though information technology is still higher, even though communication services is still higher, now it's consumer discretionary is lower, consumer staples are higher. So a little more of a defensive posture there, but looking at the overall market, that ceasefire with Lebanon, that only happened at 11:45 Eastern, 10:45 Chicago. So that's breaking right now. Does that lead to something more? Well, crude oil isn't giving us the same friendly message, right? So there's a lot of mixed signals as we sit up here at all-time highs. So a lot of caution, I think, in the market sitting up where we are. We've come a long way. Like I said yesterday to you, Diane, we've come a long way, a lot quicker than people thought we would. And so it's hard to get your footing here. But here's what we do know, and this is the most important. We are going into heavy large cap tech earnings coming out in the next week and a half. So April 29th, Meta, Microsoft, Amazon, Google Alphabet come out with earnings. Netflix after the bell today that we're going to talk about. Tesla on the 22nd. Apple on the 30th. I mean, NVIDIA's like a month out, so that's different, but we're getting into the gauntlet of large cap tech is coming on the horizon. I think people are starting to get their accounts ready for that move, and that might be why earnings, what changed? A lot of people are asking, what changed? Why did the market rally? Well, the thought of maybe dissipating pressure on crude oil and stocks in general and corporate earnings that have started off very well in terms of banks. So, we're getting some serious mixed signals here from the market.
All right, speaking of earnings, Taiwan Semi cashing in on the AI chip boom. They had a sharp jump in first quarter profit. It topped expectations. The stock pulling back a bit today. Tom, is this a classic case of buy the rumor, sell the news?
I think it's more of maybe it was priced in a little bit as far as the movement that we've seen in Taiwan Semiconductor. You look at that, you mentioned record quarterly profit up 58% year over year. Just over $18 billion. EPS beat. Gross margin, 66.2%. That's expanding sharply on a year-over-year basis. Not surprising there. Then you look at the guidance. They guided now expected to be growth of 30% year-over-year, above 30% year-over-year. That was expected to be at 30% or maybe even a little bit lower, so guidance a little bit better. CapEx, though, thorn in the side here. They're trending toward the high end. but is that more of a story about how well their business is doing, that they're increasing CapEx to meet demand, right? We've all talked about this, that they don't have enough supply to meet the demand that's out there from the chip makers at this point. So that's actually a good problem to have at this point. And then if you start taking a look at the more advanced chips that they're making, the profit margins are growing or increasing there. That's where a lot of their growth is taking place. But the other segments of their business did well also. I think maybe this is just maybe some consolidation warranted after the spectacular rise that we've already seen in the shares so far.
Kevin, your take on TSM?
Well, I think this, and Tom just mentioned it, this is purely a function of the stock had rallied into the earnings event. And remember, similar to a quarter ago, when these large cap tech stocks started to release earnings, the market didn't like increases in CapEx spending. And them increasing 52 to 56 billion, that's probably why, if you had to put your finger on why the stock is soft, probably because of that. They're going to want, and this could be a real precursor for first quarter earnings when we get them in a week or so on the 29th. They're going to want responsible levels of CapEx spending, not just crazy raises, because the market does not react well to that anymore. You're seeing that, you saw that a quarter ago. You're seeing it in Taiwan Semi today.
All right, let's talk about PepsiCo off the back of its quarterly results. Those shares fizzing up right now. They beat expectations on the top and bottom line. Revenue coming in at $18.9 billion. That price-cutting strategy actually worked, Tom. It seems that way. You had customers hitting up the snack aisle for this one. Tom, your take on Pepsi's earnings?
Yeah, a resurgence in that segment of their business, which had been lagging over the past few quarters.
Rolling it up. It is now noon. It is time for lunch. I'm closing out the stream. Let's find somebody, if we have anybody to raid. Find someone to love. Find someone to love. I don't like reading pirate software, but he seems to be the only one on.
It's okay. It's okay. I won't have scurvy.
Which? Do it. Just chatting. Just chatting. Just chatting. Just chatting. Just chatting. Potato. Just dreaming, chatting, just dreaming. What's this? Chatting. It looks like they're exercising, though. BRB. Whoa. Frog stretch. She's exercising. Let's go to blue. Today is Thursday. Is there anybody I'm following? Young Guns. Jory. Mega Mike. Concarnage. And let's go with Thursday Young Gun. music. She doesn't want to raid. Okay, she doesn't want to raid. All right, then we'll just go ahead and end the stream. I will be back tomorrow morning. Well, tomorrow is Friday. Fridays are a little early for me. I have to end early, but I hope this gave you a little bit of ideas on paper trading. Looking at the paper trade, we didn't do too bad. 10. There were 2 times we filed. Sold 8. Would have sold 8. Stock's doing okay. It just it's currently 198. So my stock looks good. I purchased some Nvidia. But we'll see. We'll see how it turns out tomorrow. All right. Peace out. Be good.
This is Sugar Space, y'all. We got lots of music, technology, and more. Come on!